In 2022, the 6th AIFC is held within the same year as Indonesia's G20 presidency. This year's conference bears a very important theme: Islamic finance role in MSMEs empowerment, boosting capability and fostering inclusiveness for sustainable future. Recover together, recover stronger.
Assalamualaikum warahmatullahi wabarakatuh.
Good morning, good afternoon, and good evening to you. Alhamdulillah, all praise goes to Allah, the All-Beneficent, whose grace and blessings have made it possible for us to have you here today for the 6th Annual Islamic Finance Conference, Islamic Finance Role in MSMEs Empowerment, Boosting Capability and Fostering Inclusiveness for Sustainable Future.
Her Excellency, the Minister of Finance of the Republic of Indonesia, Mrs. Sri Mulyani Indrawati, His Excellency, Governor of Bank of Indonesia, Mr. Peri Warjio, His Excellency, Vice President Finance and Chief Finance Officer of the Islamic Development Bank, Dr. Zamir Iqbal, our honorable guest, His and Her Excellency, Ambassador of ISDB member, OIC member, ASEAN member, and G20 member countries to Indonesia in Jakarta. Also Head of Mission of International Organizations in Indonesia.
Head of Fiscal Policy Agency, Dr. Febrio Kacaribu. Co-Chair of G20 Global Partnership for Financial Inclusion, Ms. Magda Bianco from Italy Central Bank. Director General of Islamic Development Bank Institute, Dr. Sami Al-Suwailem. Advisor for International Trade and Industry to Indonesia Finance Minister Dr. Kiki Feriko, Deputy Minister of Entrepreneurship, Indonesia's Ministry of Cooperatives and SMEs, Ms. Siti Aziza, Director of Economic Empowerment Development, Islamic Development Bank, Dr. Nabil Galeb, Head of SME Policy, State Secretariat for Economic Affairs as ECO of Switzerland, Mr. Martin Godel.
And also greetings to all participants of this conference that has been attending virtually today through Zoom and YouTube channel of the Ministry of Finance of the Republic of Indonesia, as well as BKF Kemenkeu. My name is Fatima Medina.
And I am Risminda Anindita.
It is our honor to welcome you to the official side event of the G20 Indonesia Presidency 2022 with the theme, Recover Together, Recover Stronger.
This year's presidency presents opportunities for Indonesia and G20 member countries to work together to develop strategies to accelerate and strengthen economic recovery. Together with various national, regional, and international stakeholders, Indonesia G20 presidency has collaborated to prioritize empowering women, youth, and MSMEs in global conversation about inclusive growth and higher productivity.
Islamic finance as part of MSME's financial landscape has played a significant role in empowering MSMEs, particularly through its unique, inclusive Sharia risk-sharing schemes. And this topic is also in the line with Indonesia Islamic Economic Master Plan milestone for 2022 and in accordance with G20 party issues.
Ladies and gentlemen, today's conference will have 3 segments. First, we discuss how Islamic finance has played a critical role in MSMEs empowerment. To emphasize this focus, we will also have Dr. Sami Al-Suwailem of the Islamic Development Bank to share his talks in a guest lecture.
Following that, in partnership with the Faculty of Economics and Business of Bogor Agriculture University, we will host a presentation panel session of the top 20 papers from the 6th IFC call for papers. And please ensure that you don't miss the details of the link meeting information.
Well, and after the presentation session, we will have a break for lunch and do for prayer. And we will resume with MSME's Global Empowerment Efforts, highlighting developments, challenges, and strategies applied. This 6th Annual Islamic Finance Conference is organized by the Ministry of Finance of the Republic of Indonesia in cooperation with the Islamic Development Bank Group, Bank Indonesia, the Global Partnership for Financial Inclusion, and its counterparts, Better Than Cash Alliance, Women's World Banking,
United Nations Development Program, the National Islamic Economic and Finance Committee, the Indonesian Association of Islamic Economists, and Bogor Agricultural University.
To begin this program, we'd like to invite everyone to stand up and sing the national anthem of the Republic of Indonesia, Indonesia Raya.
Before commencing the seminar, we will listen to the recitation of the Holy Quran by Mr. Mulia Shafnur from the Ministry of Finance of the Republic of Indonesia. Mr. Mulia Shafnur, you may have the floor.
Assalamualaikum warahmatullahi wabarakatuh. A'udzu billahi minasy syaithanir rajim. Bismillahirrahmanirrahim. Ya ayyuhalladzina amanu la tuhillu sya'airallahi wala syahral haram wala syahral haram ولا القلائد ولا آمين البيت الحرام يبتغون فضلا من ربهم ورضوانا وإذا حللتم فاصطادوا ولا يجرمنكم شنآن قوم أن صدوكم عن المسجد الحرام أن تعتدوا وتعاونوا على البر والتقوى ولا تعاونوا على الإثم والعدوان واتقوا الله إن الله شديد العقاب لن تنالوا البر حتى تنفقوا مما تحبون وما تنفقوا من شيء فإن الله به عليم صدق الله العظيم. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Mulya Shafnur. May Allah always give us guidance and help. Amen. The next agenda would be the first welcoming remark from the Head of Fiscal Policy Agency, Dr. Febrio Kacaribu.
Dr. Febrio Kacaribu, you may have the floor.
His Excellency Dr. Peri Warjio, Governor of Bank of Indonesia, His Excellency Dr. Zamir Iqbal, Vice President for Finance of the Islamic Development Bank Group, Ms. Magda Bianco, Co-Chair of G20 GPFI, distinguished speakers, many distinguished speakers today, participants, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Very good morning to all of you. Thank you very much for attending this very big event for Ministry of Finance and Fiscal Policy Agency. On behalf of Fiscal Policy Agency, I would like to welcome all of you to the 6th Annual Islamic Finance Conference 2022. The 6th AIFC is a continuation of annual series of events that brings together a wide spectrum of stakeholders, policymakers, professionals, economists, academics, and private sectors to discuss various key Islamic finance, economic, and development issues all over the world, particularly for Indonesia. This conference also serves as a flagship event of the Fiscal Policy Agency, Ministry of Finance, designed to support Islamic finance development. The AIFC has been conducted in 5 times since 2016. The first AIFC was started in Jakarta, then in Yogyakarta, Makassar, and Surabaya. Last year, due to COVID-19 pandemic, the 5th AIFC was held in virtual format. This year, AIFC holds a strategic value as it is coinciding with the formulation of the initiatives to reform Indonesia's financial sector. Thus, the discourse, knowledge, and information gained from this event will hopefully serve as a constructive input in formulating policies to strengthen and develop Islamic finance in Indonesia. In addition, since the 6th AIFC is held within the same year as Indonesia's G20 presidency, it is expected to contribute to the G20 agenda and main theme of Recover Stronger, Recover Better by the strategic positioning of Islamic finance as one of the key growth drivers. Following the same thought and spirit, this year's conference bears very important theme of Islamic finance role in empowerment, boosting capacity, productivity, and inclusivity for sustainable future. The issue of empowerment in the context of improving productivity and inclusivity is especially important for countries struggling to recover from adverse impact of the pandemic while facing emerging global pressures generated by global conflicts, increasing debt and inflationary pressures. Having a strong and sustainable resources and industries will go a long way to ensuring the survivability of an economy during the current multidimensional crisis. In this respect, the 6th AIFC has been designed to discuss and address a number of specific key issues in relation to economic empowerment, such as SME empowerment, including empowerment of MSME's portfolio, improving MSME's assets and capabilities, economic empowerment in the digital era, and improving women and youth assets and capabilities. In parallel with this conference, there is also a call for paper event, harness valuable information and insights from academics and practitioners to serve as a source of references for stakeholders and policymakers, particularly in the economy and Islamic finance arena. The implementation of the call for paper is carried out in collaboration with several universities, coordinated by the Faculty of Economics and Management, Bogor Agricultural University. The number of submitted papers is 142 abstracts with a category of 104 general researchers and 38 young researchers. Later, the top 20 selected paper will be presented in the IFC. As a result of these activities, the 6th IFC is expected to provide valuable insights on how Islamic financing can help empower the economy through its support for specific areas such as MSMEs, women and youth entrepreneurs, as well as digitalization. This includes opportunities and challenges which exist and the role of the government in its facilitation. We invite the best speakers and panelists to gain the best input, including many experts in the field of development economics, Islamic finance, both nationally and internationally, academics, international institutions, government institutions, financial sector regulators, and financial industry institutions. Considering that this year's AIFC as a G20 side event, some of the speakers involved are representatives from the Ministry of SMEs, State Secretariat for Economic Affairs, SECO of Switzerland, ISDB, Better Than Cash Alliance, Dinar Standard, ETIS Group, UNDP, Women's World Banking, and Alami Group. Excellency, Finance Minister of Republic of Indonesia, Governor of Bank of Indonesia, ladies and gentlemen, considering the nature and the characteristic of Islamic financing, which highlights the importance of risk sharing and accountability, Islamic financial instruments can play an important role as a reliable and safe financing instrument for both providers and users. Nevertheless, a supportive and conducive environment should be provided for the expansion and implementation of Islamic finance instruments. This can be done through a variety of measures, including intensifying Islamic finance literacy and education, establishing a stronger link between halal industries and Sharia financial institutions, promoting Islamic investment instruments, especially those linked with strategic development goals such as green sukuk within the private sector markets. This will also support government and effort for capital market deepening. By reinforcing the role of Islamic finance instruments, we are not only providing the economy with just another financing options, we are providing them with a safer economic prospect. Through the 6th FC, we are hoping to gain strategic recommendations and perspectives on how Islamic finance can bring about a safer and more sustainable financial support to MSMEs as well as women and youth entrepreneurs. Having an Islamic financing instruments as a viable option will hopefully improve inclusiveness in a safer and less risky way for both creditors and debtors. Concluding my brief remark, I would like to convey my gratitude to all of our partners for the support and help we get in organizing this event. We especially want to thank the Islamic Development Bank, Komite Nasional Ekonomi dan Keuangan Syariah, KNEKS, Masyarakat Ekonomi Syariah, MAS, Ikatan Ahli Ekonomi Islam Indonesia, IAI, IPB University, as well as my own team of officers and analysts from Fiscal Policy Agency for the best effort they have given in the preparation and execution of this important event. I hope this event can provide us with clearer policy path on how to maximize the role of Islamic finance in our economy in support of our goals for stronger, sustainable, and more inclusive recovery. I wish all of you to have a productive discussion ahead. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Febrio Kacaribu, for the warm remarks. Next, I would like to invite the co-chair of G20 Global Partnership for Financial Inclusion, Ms. Magda Bianco from Italy Central Bank, to deliver her remarks.
Ms. Magda Bianco, you may have the floor.
Good morning, good afternoon, good evening to all of you. It is a real pleasure and an honor to be here today with so many distinguished guests as co-chair of the Global Partnership for Financial Inclusion, which is deeply committed to enhance MSMEs finance. MSMEs are the backbone of most developed and emerging countries. 90% of all businesses, 50% of employment, between 60 and 70% of GDP in most countries. They are core for most of economies and might represent a formidable source of growth and development if they manage to be productive and grow. One of the main obstacles to this growth is actually access to finance. So financial inclusion is really essential, not just for individuals, but also for MSMEs. And we know there are many obstacles to the access of finance for smaller enterprises, higher costs to reach and serve MSMEs for financial service providers, the information asymmetries that impact the availability of financial and credit data, which are needed to assess their creditworthiness, sometimes the lack of collateral, in general, the difficulties in registration, verification. Now we know that digitalization of financial services offers enormous opportunities for individuals and MSMEs financial inclusion. It provides access to alternative sources of funding. It offers to both traditional and alternative providers additional information sources for the credit risk assessment, allowing MSMEs to access finance. It induces also new business models, such as open banking, favoring the unbundling of financial services and hence reduce costs and more tailored products also for MSMEs. As a whole, really important opportunities for MSMEs access to finance. But at the same time, digitalization offers new opportunities for MSMEs and in general, smaller niche producers to exploit, for example, the platform structures to reach a much wider consumer potential. However, we know that there are many challenges. Digital financial literacy and awareness of digital financial services, the presence of sufficient digital infrastructure, financial regulation and supervision in terms of ensuring consumer protection, the need of digital identity, data privacy and protection of data. Well, policies must really address these challenges to favor innovation, but at the same time govern innovation so that it is really in the direction of benefiting its users. And in this context, in today's context of reducing deserving MSMEs financial constraints. For these reasons, MSMEs finance is one of the areas addressed by the Global Partnership for Financial Inclusion to enhance financial inclusion. And this year, under the Indonesian presidency, we developed, together with the support of SMEs Finance Forum, which is one of our implementing partners, a living database that will include a set of best practices of examples of digital financial services designed for MSMEs, also beyond credit. And this will help in setting the stage for leveraging effectively on digitalization to overcome MSMEs' financial constraints. We have received a large number of cases, at the moment more than 100, covering a wide range of products and services, including payment, insurance, savings, credit guarantee, risk management, remittances, factoring, financial education. We see that different products and services are in different stages of development and have achieved varying results. We see that different market conditions, policies, regulatory environments where the innovations are offered have played critical roles in the success and the adoption of these new products and services. These case study submissions, which represent just a fraction of the cases we expect to have eventually in the database, give great and useful insights into how innovative financial products and services can really accelerate financial inclusion, especially for micro and small and medium enterprises and underserved segments of the population. Hence, the GPFI really encourages participation and contribution from all financial services providers and development institutions in innovative financial services to help MSMEs recover from COVID and realize a more sustainable future. Islamic finance for MSMEs contributes addressing some constraints I mentioned before and can really benefit from digitalization as well. I think this conference will bring very important knowledge and sharing of experiences, particularly relevant now after the profound impact that COVID had on micro and small and medium enterprises. In a complex and unstable environment as we are living now, the role of finance, including Islamic finance, to empower MSMEs will be fundamental to boost capability and foster inclusiveness for sustainable future, as in the title of this conference. It will be fundamental to recover stronger, to recover together and recover stronger. Thank you very much.
Thank you, Ms. Magda Bianco, for your warm remarks. Ladies and gentlemen, I would like to honorably invite our first keynote speaker, the Minister of Finance of the Republic of Indonesia.
Please welcome Her Excellency Minister Sri Mulyani Indrawati.
Thank you so much. Bismillahirrahmanirrahim. His Excellency Governor of Bank Indonesia, Mr. Peri Warjio, Honorable Vice President for Finance of the Islamic Development Bank Group, Dr. Zamir Iqbal, Honorable Director General of the Islamic Research and Training Institute, Dr. Sami Al-Suwailem, Ms. Magda Bianco, the co-chair of the G20 Global Partnership for Financial Inclusion, distinguished speaker, moderator, participants, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. First, I would like to convey my appreciation to the committee for organizing this 2 days event and all support of our partner, especially Islamic Development Bank Group, which accompany Indonesia in developing Islamic finance. This year, the 6th annual Islamic Finance Conference takes on the topic of the role of Islamic finance in MSMEs empowerment. I believe that this is a very, very timely and very important issue, which is aligned very well with the G20 Indonesia presidency theme of accelerating the financial inclusion of MSMEs through digitalization. This event also become a great platform for policymakers, academia, private sector, and other stakeholders to exchange view and brainstorm what is the best way to develop and empower MSMEs. I would like to begin first on my speech this morning to highlight the Indonesia recent economic development, and then we'll follow by the issue of MSMEs and Islamic finance. Ladies and gentlemen, with more controllable and manageable pandemic situation, the economic recovery in Indonesia is making a progress. But we also witnessing a growing shifting risk, which is coming from geopolitical, mainly the war in Ukraine, but also attention on a geopolitical globally. This has resulted into the increasing commodity price due to the supply disruption, and also at the same time, a very volatile and very uncertain global situation. the increasing commodity prices has also creating an unprecedented inflation, high inflation in especially advanced country. This then following with the tightening of the monetary policy can jeopardize and threaten the global economic recovery. The Indonesia economy under this uncertain situation is actually showing both the resiliency and the momentum of recovery, which is on the second quarter showing a beyond market expectation economic growth. The second quarter growth of 5.4% supported by a very, very high export, which is followed also by a very robust recovery in consumption. This high economic growth and also recovery has also become more inclusive, which is supported by our National Economic Recovery Program, which is aiming for reducing, or in this case, to reduce more poverty, especially after increase during 2020 first year of pandemic. The poverty alleviation program and job creation program become our focus on the economic recovery. The result, unemployment rate has decreased to 5.83%, while poverty rate also has declined to the single digit in 9.54%, especially after in 2020, it's increased into a double-digit poverty rate. The state budget also enjoying a high commodity prices has recorded a very impressive performance. In addition to the lower than expected and lower than planned deficit, we also were able to implement and pass the legislation, which is consists of a very important reform for the state budget. This is included the law on harmonization of the tax regulation and also the law which is related to the local government transfer. We will continue to support the economic growth and especially protecting the poor and supporting small medium enterprise through our fiscal tool, while at the same time reforming our budget both on the revenue side, spending side, and financing side. Now let me proceed to the role of MSME and how the government of Indonesia supporting the MSME's development. Globally, as mentioned by Ms. Magda, that the MSME are actually the backbone of the global economy. They account for 90% of businesses and contribute more than 50% of employment worldwide. In emerging economy, formal MSMEs contribute approximately 40% of gross domestic product or GDP, and this contribution is actually significantly larger if we also include the informal MSME, which is mostly unrecorded. The MSME's development and empowerment, therefore, is a very critical for any economy. This is not only in the form of inclusivity as well as equality, but also strategically in creating better quality of job. Since pandemic, COVID-19, which hits harder for most MSME, unlike financial crisis previously, that is a decade ago in 2010, or Indonesia or ASEAN financial crisis in 97-98, which hit hard the big corporation and financial sector, pandemic and the crisis that follow or the implication of the pandemic hits harder for the most MSMEs. This is due to the nature of the pandemic, in which not allowing people and business activity to take place to prevent the spreading of the virus. And that's why within the recovery process, we have to make sure that the MSME will receive special attention because they suffer much deeper scarring effect. And for Indonesia, the recovery and also performance of Indonesia economic is also contributed by the recovery of our small and medium enterprises. This is because the design of the economic recovery program, the National Economic Program, Recovery Economic Program, also put the recovery of small and medium enterprises within one of the most important pillar, in addition to the health as well as social protection. Indonesia have 64 million MSMEs, which is representing 99% of the total business. They even absorb 97% of the employment and contributed to 60% of our GDP. The main challenge faced by MSMEs is first that they suffer lack of market access, lack of skilled human resources, lack of the use of more advanced technology, and also limited access to financial services. And their condition has been exacerbated by sometimes a weak infrastructure, which is actually happen in many remote areas. So tackling these challenges, the government of Indonesia priority in developing and empowering MSMEs is actually addressing all those aspects of the weaknesses. First, on the infrastructure development, the government is actually putting significant budget for developing infrastructure to improve connectivity. This is not only in the form of road, railroad, bridges, airport, but most importantly, within the digital technology trend now, we also pay attention, specific attention to the digital connectivity. We put significant budget in order for us to be able to make sure that the remote area, around 20,000 villages in Indonesia, or those which is remote or lag behind, will be connected through Palapa ring satellite and base transceiver station, so that they, all those in the remote area, will be digitally connected. The second, related to the limited access to finance, which study indicated that around 18 million of the MSMEs in Indonesia, which is not have an access to formal financing. And approximately 46 million MSMEs still need additional financing for their working capital or for their investment. The government has put several programs in place to support MSME for this access to finance, such as we expanded significantly in the past 5 years Kredit Usaha Rakyat or People Business Credit and Ultra Microfinancing, or we call it the UMI financing. In the first semester of 2022, the Kredit Usaha Rakyat or KUR, and UMI program has been disbursed to 3.79 million small, medium, and ultra micro, 1 million ultra micro respectively. With this program, we also provide allocation within the Sharia scheme that can also be the choice for the MSME. Of total allocation of 313.7 trillion, we have allocated the Sharia scheme of 20.7 trillion rupiah of the kredit usaha rakyat. The government also continued to push the digitalization of the MSMEs. COVID-19 pandemic, as already witnessed by all of us, is actually become the trigger for more transformation toward digitalization. We believe the digitalization will make MSMEs transaction easier to do, enable them to access new market, and also enable MSME to run their business more efficiently. Until January this year, 17.2 million small, medium enterprises and micro enterprises have been digitalized. This is out of our own government target to actually connecting 40 million small, medium enterprises and micro digitalization by 2024. We are also aware that the effort to empower MSMEs has been conducted not only by the government, but by many stakeholders. And this is also using many instruments, including our state-owned enterprises, local government, and also we partner with the private sector. We have to increase and strengthen the synergy and coordination so that the effort to empower MSMEs will gain the effective result. For that, Ministry of Finance initiating a coordination and integrating program from all units within the Ministry of Finance, which related to the empowerment of the MSME. We call it Kemenkeu Satu, or One Ministry of Finance effort to support small, medium enterprises. Government support definitely will not sufficient to support and empower MSME. So we need to also strategize and increase the synergy and coordination with public sector, academy, and also private sector. This is also including how to develop the Islamic finance scheme for the small, medium enterprises. Ladies and gentlemen, Islam is a comprehensive religious that regulates various aspects of human life. This is including theological aspect, worship aspect, social aspect or muamalah, economic aspect, legal and criminal aspect, or even political and state aspect. Islam is not just a religion with empty rules without value, but Islam is an ethical religion that it's lots of universal values that match human characteristic, which is supporting the dignity of the human being. Through this value, we have to be able to translate the value and the spirit and the moral of the Islamic religion to become a really effective tools of policy and instrument, especially to deal with and to solve problem of everyday human life, especially poverty. When we talk about Islamic value, we also have to take into account or the core value related to the equality and a just principle is very, very strong. So addressing those who still left behind becoming a moral as well as mandatory priority to, in this case, implement Islamic value. For all of us, empowering, especially those which is in a weak position, it is guided by two very important principles. The first, which is actually stipulated in Quran Surah Al-Hasr, ayat number 7, so that it will not perpetual distribution among the rich from among you. It means that the poor has the same right to get and to manage wealth. And in this case, we have not only to provide fish, but providing empowerment by providing a hook. This is actually consistent with the teaching of the Prophet Muhammad, peace upon him, that we have to give eggs to the beggars so that they can work and to support his family. Within the current context, the obligation for all of us to design policy to eradicate poverty and to empower those which is weak, vulnerable, and left behind is also very important. For the government, this means that we have to cut the poverty so that they are not going to be inherited to their next generation. Cutting intergenerational poverty is therefore very consistent with the Sharia and Islamic value. And that's require the intervention from the very upstream. First, education and skill training to develop the potential of the Ummah. And the second one, providing an access which is accessible, especially financing for the small medium enterprises, and also providing assistance, technical assistance, consultation, hand-holding, and also monitoring the progress of the business, especially small medium enterprises. Ladies and gentlemen, empirical evidence point out that financing for small medium enterprises faces many challenges, no matter how strong your goodwill. On the one side, financier, in this case the source of financing or the owner of the capital, are usually quite reluctant to provide financing to small medium and enterprises due to many reasons. The asymmetric information that is translated into a perception of high risk, no collateral, higher transaction costs because small volume but massive in terms of scale, no good transaction record, and the loan proposal from the small medium enterprises, which is usually still in a very rudimentary stages. So we have to be able to address those perception of risk from the owners of the capital. Digital technology definitely can become one source of very important solution. On the other hand, for the small medium enterprises, they perceive the condition for accessing capital is too rigid and cannot be afforded by them due to, of course, their lack of capacity. The collateral definitely is not available for many or most of the SMSE. They also don't have sufficient technical advice and also a very high transaction. So how we are going to address these two mutual, what you call it, barrier for access to finance, whether this is coming from the owner of the capital or institution, whether this is bank or non-bank, and from the demand side, that is small, medium enterprises. Digital technology definitely is going to be one of the most important. With the digital technology, the transaction, the information, as well as the monitoring of the real condition becoming much faster and cheaper. And this is actually aligned well with the Islamic values of providing more, what we call it, complete information. Asymmetric information is actually the source of inequality or unjust practices. I think many of us who are familiar with Islamic values showing that Prophet Muhammad, peace be upon him, is actually showing that if you selling something and you know that your merchandise is not good, you actually have to show it. This is actually addressing the very basic issue of asymmetric information. We are dealing with the small, medium enterprises. This asymmetric information is pervasive and is becoming one of the most important obstacles to actually expand it, the access of finance in the most efficient and effective way. So how we are going to build a framework that can improve financial access through, in this case, providing a certain level of guarantee and designing instrument that will allow this asymmetric information to be eliminated or reduced in the most efficient and maximum way, in the most credible way. This is going to be one of the design is actually to address the very important bottleneck. The model, which is the portfolio of Islamic financial product, which is available for the small, medium enterprises, including financing, guarantee, saving plan, money transfer, and cash management services combined with digital technology can potentially become the solution, because all information actually can be collected in the more efficient way and in the less costly way, and that can address the issue of asymmetric information. The collaboration of big Islamic financial services provider, such as bank, investment bank, and other investment vehicle with Islamic microfinance institution, such as Baitul Mal wa Tamlil or BMT, Micro Wakaf Bank, BWM, and others, is actually can bridge this, what you call it, incomplete and asymmetric information. And it can design not through the leverage or loan scheme, but through equity-based financing, so that the risk can be actually structured in a more equal and just way. This model is the integrated between, on the one hand, social purposes with commercial financing. Big financial institutions can provide source of fund in a much cheaper cost, while Islamic microfinance institution can provide financial services which is directly deal with the small medium enterprises through financing, through asset-based financing, through takaful in providing guarantee scheme to mitigate risk. With this model, Islamic microfinance institution can and have a central role not only in providing financial services, but also providing technical assistance and coaching and addressing the issue of perceived risk. Islamic social finance can also provide a cheaper financing and promote resiliency during financial crisis. So Technology, digital, and information, especially very powerful in actually translating the principle of Sharia in action by providing better analysis and assessment, building financing scheme, including and especially important, knowing your customer and know your partners, and also to build development pathway and network. And also through this digital technology, we will be able to trace and track the behavior of the MSME, the character of the owner, and also the development of their asset. These are all very valuable information. With the model, the perceived high-risk financing of providing financing source for the small medium enterprises can be significantly reduced. What we are talking about, many SMSE is actually have the access of finance, but with a very, very extremely high price. And that's unjust, and that's not Sharia. So many of the Islamic value should and could be translated into what you call it a workable scheme, which providing mutual profitable from both sides, but without violating the most important principle, that is just and equal, as well as responsible risk management. Ladies and gentlemen, before I finish my speech, I would like to again convey my appreciation to all speakers, moderators, and participants. I do hope that this event will provide an excellent platform in exchange of the knowledge as well as experiences and even idea and new idea, so that we are going to be able to continue making progress. I think the idea from many stakeholders that empowering MSME is not only morally right, but also strategically important for the resiliency of the economy is actually has been widely shared. The challenge for us is how we are going to make a real progress, which is actually addressing and also implementing the most important value of the Sharia principle, that is creating a just and equitable economic activity as well as economic implementation. So with that, I would like to wish you all a very productive event and meeting. Thank you so much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Your Excellency, for your remarkable speech. Distinguished guests and participants, before we move on to the next keynote speakers, let's capture today's opening moments by taking photos together. We're pleased to invite to turn your video on for a moment the Minister of Finance of the Republic of Indonesia, Mrs. Sri Mulyani Indrawati, Vice President Finance and Chief Financial Officer of the Islamic Development Bank, Dr. Zamir Iqbal,
Co-Chair of G20 GPFI, Ms. Magda Bianco, Head of Fiscal Policy Agency, Dr. Febrio Kacharibu, the Director General ISDB Institute and Chief Economist ISDB Group, Dr. Sami Al-Swailam.
Ms. Magda Bianco, please, would you please turn your video camera on for a photo session?
In the count of 3, 3, 2, 1. Thank you, Your Excellency.
Yeah, thank you very much, Your Excellency. And now it is my pleasure to introduce you to our next keynote speaker, the Vice President of the Islamic Development Bank.
Thank you so much. I hope Thank you so much. Bismillah ar-Rahman ar-Rahim. Your Excellencies, the Ministers, Honorable Government officials, distinguished guests, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuhu. On behalf of the Islamic Development Bank, I would like to begin by extending a warm appreciation to the Government of Indonesia for organizing the 6th edition of this flagship event. It is my pleasure to represent Islamic Development Bank at this August event alongside our strategic partners to deliberate on the prevailing challenges facing Islamic finance as a catalyst for supporting sustainable development in our member countries. Excellencies, you have witnessed an unprecedented economic crisis in recent times. The COVID-19 pandemic, which uprooted the fabric of society and prevailing social economic order, has brought about tremendous changes at the global, national, and subnational level. Micro, small, and medium-sized enterprises, or MSMEs, have been the most adversely affected. Word has gone into where about more than 50 million people have gone below poverty in the Islamic Development Bank member countries. Ongoing conflicts and political instability have further aggravated those challenges, affecting recovery from the pandemic in many parts of the world. In this context, easy access to finance and markets remain a crucial constraint to MSMEs recovery. Therefore, it has become more critical to build their resilience during these turbulent times to cushion any abrupt shocks and stresses and adapt to the changes and uncertainty in the market. Realizing the critical role of MSMEs in job creation and economic progress, the Islamic Development Bank Strategic Realignment 2023 to 2025 specified inclusive human capital development as a key pillar under which SMEs and job creations are one of its focus areas. Since its inception, Islamic Development Bank has been a leader in strengthening and enhancing Islamic finance as part of our mandate to advance the livelihood and prosperity of our communities. Thanks to its ethical values and instruments, Islamic finance is well positioned to unleash its full potential to economically empower MSMEs. To mitigate the pandemic on vulnerable enterprises like MSMEs in our member countries, Islamic Development Bank launched an MSMEs flagship program called Strengthening Economic Resilience of Vulnerable Enterprises, or SERVE. The SERVE already has footprints in Djibouti, Jordan, Palestine, and other countries to follow suit, inshallah, which include Chad, Morocco, Uganda, and Uzbekistan. We have implemented many initiatives on member countries to promote and support MSMEs through direct risk-taking in the business. This rich experience has culminated in the economic empowerment approach. It is an impact investment methodology that combines both suitable modes of Islamic financing and access to key non-financial services. Such an approach endeavors to ensure that MSMEs become financially included through access to capital, and most importantly, economically included through access to a full range of non-financial services. In this matter, they become assimilated into the mainstream economy as active participants and contributes to sustainable growth and development. This requires Islamic financial institutions to provide not only financing, but also institutional and market enabling support to help MSMEs overcome the challenges. By doing so, Islamic financial institutions will become more competitive as their clients will benefit from the value added services beyond mere credit. In addition, the enhancement of enabling regulatory environment, especially for Islamic asset-based and equity-based contracts, will allow Islamic finance to be of benefit to MSMEs. The business modality is well captured under the ISDB's economic empowerment approach, which means shifting from financial inclusion to economic inclusion. The three in-house developed toolkits in English and Arabic versions, which were launched during the annual meetings in Uzbekistan in 2021 and in Egypt in 2022, respectively, could be the best practices in economic empowerment approach, design, the application of Islamic financial products in MSMEs, and the methodologies of monitoring and evaluating activities. Advancement in financial technology or fintech have made it easier to go beyond credit to provide creating services, particularly in MSMEs. Digital marketplaces bring together under one roof the producers, the customers, financiers, and other service providers. What is impressive is the instantaneous speed at which they can transact in synchronicity with the reduced information asymmetry. Moreover, the availability of cumulative big data allows for more in-depth analysis and understanding of the pain points or the issues faced by MSMEs, which combined with advanced machine learning and artificial intelligence can be used to build the capacity of financial institutions to design solutions tailored to the specific needs of their clients. Excellencies, brothers and sisters, if flourishing MSME sectors cannot be achieved without the development of the financial industry. As the world's most populous Muslim country, Indonesia offers many unique and untapped opportunities in Islamic finance. The Islamic Development Bank Group has been an instrumental partner in this domain through the numerous capacity building programs, seminars, technical workshops, and special reports. We endeavor to support the development of Islamic finance sector in Indonesia. These endeavors were in close collaboration with our strategic partners in the country, including the Ministry of Finance, Bank Indonesia, the Financial Services Authority, OJK, the National Zakat Authority, Basnas, Badan Wakaf Indonesia, and the Hajj Fund. One possible collaboration could be mobilizing Islamic social finance resources, including Waqf, Zakat, and Sadaqah, to mainstream ISDB's economic empowerment initiative in Indonesia. To stimulate fintech application in Islamic finance, Islamic Development Bank Group organized the Smart Economy Grant Program to encourage potential entrepreneurs and future startups to apply emerging technologies like artificial intelligence and blockchain to address challenges facing their economies within the Islamic finance framework. That program was launched in October 2020 and anchored in the Jakarta regional hub. A total of 47 grant applications were received from 23 countries worldwide, and 7 were selected as winners. The winners were announced in May last year. Each winner received up to $10,000 to implement their projects. Distinguished guests, the strategic partnership between Indonesia and Islamic Development Bank Group, forged about half a century ago, has blossomed into a dynamic and diverse portfolio of approximately $6 billion, financed over 334 operations covering various sectors like agriculture, health, education, industry, energy, and finance, making Indonesia one of the largest beneficiaries of ISDB Group's products and services. In this context, allow me to reiterate that we are committed to collaborating with Indonesia to bring about the meaningful economic transformation that will culminate in thriving, sustainable, diversified, resilient, and inclusive economy. The challenges posed by COVID-19 pandemic have only strengthened our resolve to envision a world that leaves no one behind and provides reliable safety nets to all society's vulnerable and underprivileged strata. To this end, I am delighted to note that the 2022 to 2025 Member Country Partnership, or MCPS, for Indonesia successfully launched on the 19th of July in 2022 in Jakarta, will capitalize on the ISDB Group synergy in customized and client-centric manner. It is the first ISDB Group MCPS that fully aligns with the thirst and directives of the bank's strategic realignment. Two key pillars will drive the bank's intervention in Indonesia in the next 4 years. The first pillar supports green, resilient, and sustainable infrastructure, covering 6 critical infrastructure sectors. The second pillar will promote inclusive human capital development, focusing on 5 complementary sectors and thematic areas, including MSMEs and job creation. On top of that, the 4 cross-cutting areas that support the 2 pillars are: number 1, Islamic finance; number 2, climate change; number 3, women and youth; and number 4, capacity development. In parallel, the 2022 and 2025 MCPS will ensure that the ISDB Group's 6 entities work as a single body to offer complementarity and holistic services in complete harmony with the Republic of Indonesia's national plans and priorities encapsulated in 2020 to 2024 medium-term strategy, RPJMN, and Vision 2045. Distinguished guests, finally, I call upon all stakeholders to join hands and pave the way that enables Islamic finance to realize its full potential in serving the MSME well. Together, let's try to overcome the challenges that prevent the wider scale deployment of Islamic finance instrument through synergies between policymakers, financiers, investors, and think tanks. Only by doing so, we fully materialize the sought-after MSE economic empowerment and create the nurturing ecosystem needed by these vital enterprises beyond the traditional financial ecosystem. Thank you so much for your attention. It has been my pleasure to participate. Wa alaikum assalam wa rahmatullahi wa barakatuh.
Thank you, Dr. Zamir Iqbal, for your thoughtful speech. Next, we will hear the last keynote speech that will be delivered by the Governor of the Bank of Indonesia.
Please welcome His Excellency Mr. Peri Warjio.
wal mursalin wa ala alihi washabihi ajmain amma ba'd. Honorable Minister of Finance of Republic of Indonesia, Ms. Sri Mulyani Indrawati, my dear friend, Honorable Chairman of the Islamic Development Bank Group, Mr. Muhammad Sulaiman Al-Jazair, distinguished speaker, ladies and gentlemen. It is my great pleasure to be here to deliver a keynote speech on this very important seminar organizing by Minister of Finance and jointly with Islamic Finance Conference on the 6th Annual Islamic Finance Conference. I do believe today's seminar is very important on how we need to empower the MSE through Islamic finance rule. In particular, by boosting capacity and fostering inclusiveness for sustainable future. I hope today's seminar will deliver a fruitful discussion and recommendation. Distinguished speaker, ladies and gentlemen, the development of halal economy in Indonesia and around the world is being remarkably fast growing and greatly contribute significantly to the development of economy in Indonesia. The economic sector in halal industry, for example, have shown a remarkable progress. In 2021, the growth of leading sector of the halal value chains, which is including agriculture, as well as halal food, Muslim fashion, and Muslim-friendly tourism, reached 2.1% year-on-year. Furthermore, in the first quarter of 2022, the Sharia economic performance of those leading sector has creating a remarkable progress of halal value change and continue on the path of recovery, which growing to about 3.9%. They show that Sharia economy, halal economy, play a greater role in the national economic recovery. In Indonesia, the Sharia business also including a vast portion of medium and small enterprises. In it, including also the increasing and greater role of the economic development in the boarding school, or in Indonesia, which is economic development of the pondok pesantren. There are about 30,000 pesantren in Indonesia, and many of them has been developing their fast model business, not only supporting the education, but also creating opportunity for those students to learn and have experience in the business, in the entrepreneurship. Nonetheless, the challenge is there. We are seeing a lot of challenge on how we need to together increasing the role of economic Syariah, especially MSME, including in the pondok pesantren. I noted a number of challenge. One, limited market access, particularly access to modern retail market and global market. Second, limited access to finance, whether on the commercial or even also social finance. Three, limited linkage with big companies, which is including also the trading companies. Four, the challenges to meet standardization, including product standardization and halal certification. Ladies and gentlemen, Bank Indonesia has a greater role in developing Syariah economic and finance. We already developed our strategy, business strategy, since 2019, and we are moving forward to even greater. We also synergize our policy in the National Economic and Finance Development Committee. We are implementing through 46 branches of Bank Indonesia throughout the country. We also every year organizing a festival economic Syariah in the 3 different regions, Sumatra, Java, and East of Indonesia. And we also organizing every year one of the big and global event, we call it Islamic Syariah Economic Festival, which is every year has creating and also promoting Indonesia Syariah economy, not only nationally, globally. What we learn in developing our Syariah economic finance, including also how we develop finance, model business of finance for MSME. Let me just cite 3 most important points, which is we draw from our experience, Bank Indonesia experience. One, the most important in promoting Islamic economy and finance is empowering and creating model business unit of economies of the MSME. This is the most important. We need to continue promoting them to be a greater role in developing the economy as well as their share in the economic of Indonesia. In business and investment project, this is the most important, the real profitable project. Our experience showing to be able to develop the MSME, we need to make a group of them, which is to increase the economic scale. This is why the pesantren is one of the most easy and prospective to develop, because this is clustering group of MSM is important, and we need to teach them the capacity of entrepreneurship, and of course we need to give their incentive, subsidy, or other policy which is to drive the real project, the business of MSME, including also in the pondok pesantren. When the business is growing, then will be provide opportunity to, of course, access and attract more finance. That's number one. Number two, developing the finance model, which is in Islamic, we can blend both the social finance and commercial finance. In the social finance, mobilization of zakat, infak, sodako, and more important, wakaf, I think will be productive to be able to deliver a finance which is through what we call it philanthropic. But of course, to have a sizable finance, we can blend it to social finance with the commercial finance, the financing from the banking, the financing from the financial sector, the blended finance of social, Islamic, and commercial finance will be very promising, because their cost will be more efficient. And of course, the cost and the profitable, I think, will be greater than of the cost. Comparing to interest rate in the commercial and conventional bank, those blended finance of social Islamic finance and commercial finance, including those wakaf and financing, will be less than the cost of financing from the conventional banking. So blended finance is important. Number 3, digitalization. To deliver a project for MSME, including the pesantren, and also financing for those SME much easier through digitalization. This is what we experience since Bank Indonesia introducing digitalization of the payment system. QR Indonesian standard now being used throughout the country, including in the pondok pesantren, including also in the mosque, including also the MSME. Now, more than 22 million of MSME already being digitalized through the use of QR Indonesian standard, and we will be growing from year to year. We also developing and delivering the fast payment, Bank Indonesia fast payment. This is a retail payment system which is needed for those MSME to increase their cash flow. Through Bank Indonesia fast payment, this is a real time, 24/7, and very efficient. The cost of transaction is less than 2,500 rupiah per dollar. And most of all, through fast payment, the cash flow of MSME will be much faster. The waiting time to get the money from the buyer is much less. And of course, we are also delivering other form of digitalization in the payment system through the digital banking, through the fintech, through the e-commerce, electronification of social program, as well as also we deliver other form of digitalization. Digitalization will be much easier to be able to develop small project for MSME, to develop the blended finance, which is overall the 3 aspects that I want to share in this very important aspect. I hope this seminar will deliver a fruitful discussion and recommendation on how we need together to enhance the MSME through digital project, digital finance, and also digital payment system. With that, I thank you.
Thank you, His Excellency. And once again, please allow us to express our sincere gratitude to Dr. Zamir Iqbal, Minister Sri Mulyani, and Governor Peri Warjio for joining us in this auspicious occasion. And we now may proceed to the next agenda, and it is with great honor that I introduce to you our first guest lecturer for today, Dr. Sami Al-Suwailam.
Dr. Sami Al-Suwailam, he is the Director General of the Islamic Development Bank Institute and Chief Economist at the Islamic Development Bank Group based in Jeddah, Saudi Arabia. He also serves on several professional committees, including the Technical Committee of the Islamic Financial Services Board and the Task Force for Islamic Finance and Global Financial Stability at the ISDB, among others.
And today, he will be speaking about MSME's empowerment framework, especially in terms of macroeconomic view and its linkages with Maqasid Sharia context. To Dr. Sami Al-Suwailam, you may have the floor.
Thank you very much, Excellencies, distinguished guests. Assalamu alaikum wa rahmatullahi wa barakatuh. I'm quite honored to participate in this very important event, and I hope the contribution will shed some light on aspects of this very important topic concerning the small and medium enterprises sector, of course, including micro as well as startups and newly established enterprises. If you allow me, I will share my presentation so that the ideas can be easily shared with the... Can you see the screen? Is it clear? Okay, so I suppose you can see the slides. So let me start with the following. Why do we need the small and medium enterprises sector for our economies? As already the speakers have highlighted, they represent about 90% of registered firms worldwide. They account for more than 50% of jobs. In high-income countries, they contribute about 50% of the GDP, and in emerging countries, they contribute, and also they contribute about 60% of employment. In emerging market, they create 7 out of 10 new jobs in the economies, and they are, as we all know, very essential for addressing employment challenges that many of the developing countries are facing, with larger youth population, but unfortunately less employment opportunities. So the SMEs are very important to absorb and to put this important segment of the population to good use in serving their countries. Can you see the slide? The slides are moving. I suppose they are. So I will continue this. Okay. Now, the next point is that we don't want the small to continue to be small forever, of course. We want the small to grow. The micro will become small, the small will become medium, and the medium will become large. So we want this segment or this part of the economy to keep growing and not to stagnate into this middle, so to speak, middle trap. Large companies, they contribute substantially to efficiency, productivity of the economy. They create positive externalities due to economies of scale and scope. They are a very important source for tax revenues for the government. While in reality, we realize or we note that in emerging economies, the share of large firms is disproportionate. For example, for every 100 medium-sized firms, there were 9 large firms in Indonesia versus 20, for example, in the US. Now, large firms, normally, they should start small and grow. All the big companies that we see, like Google, like Apple, like Amazon, they started small. And then they grew and grew normally until they became large multinational or across the globe companies. So only if the SME sector is healthy and productive, that we can expect at least some of these companies to grow. Now, what are we looking for? What are the objectives that we are looking for from this approach or vision or framework for the SMEs? One is to support the SME sector in our member countries. Second, to improve the opportunities for sustainable growth of that sector. Third, to overcome the middle-sized trap of the SMEs and to create measurable and impactful value for the economies of our member countries. The two major constraints for the SMEs are one, access to capital, and two, access to markets or economies. These are the most important two fundamental constraints facing the SMEs. Already speakers have indicated issues related to the access of capital. According to the IFC, International Finance Corporation, 45 to 55% of the formal and informal MSME sector in developing economies are either unserved or underserved. There is a gap in financing that sector, formal and informal, about 3.5 trillion in developed countries in the OECD, and about 2.5 trillion in developing countries. So there is a huge gap that we really need to address and find ways and means to overcome that gap and to fill that gap. And this figure shows the distribution of the credit gap across the globe, and you can see the majority of our member countries, about 40 to 50%, and many of them go even beyond 60 or even 70%. Now, how to finance the SMEs? Debt is very important at a certain level, but beyond a certain level, debt would become dangerous. Debt buildup, as well known in economics and all economic studies of growth. Debt buildup is a major obstacle to growth. The larger the debt, the larger the debt service, and therefore the less cash available for reinvesting and therefore for accelerated growth. The managing director of the International Monetary Fund already warned of the global debt crisis in the making because of the debt buildup. Since the global financial crisis and then the COVID crisis, countries, governments, and even the SMEs, they accumulated debt that could be a threat to the growth of that sector. The middle trap is the problem that many of those, the majority of those small and medium enterprises, they don't grow up. For example, only 1 in 10 SMEs grow to 1 in 10 of the small enterprises, they grow to become medium-sized, and 1 in 100, they grow to become a large firm. So you can see that is not a very healthy situation. We don't want those small firms to continue forever, at least not all of them. So at least some of them, they should have the ability and the capacity to grow and contribute to the economic value of the country and cross borders as well. Now, to some extent, this middle trap is at least in part, linked to the debt trap. Once a startup, grows and become small or medium and become, stable and have stable cash flows, they become bankable, and therefore they will become dependent on on banking financing. Now, bank financing is very important. There is no question about this. Banks play a very critical role in supporting businesses. But if the bulk of financing is through the banks also are risk averse. They will not take on, major risks in the growth of these small or medium enterprises. So if these firms, small or medium, they become over-dependent on debt financing, that means the potential for growth will be extremely limited. And therefore, they will continue to stay small for probably the rest of their lives. So if we want to break this trap, this middle trap, we have to introduce equity and risk-sharing capital so that it become accessible to these SMEs in order to overcome these traps, the middle-sized trap and the debt trap. Now, musharaka is not only about equity. Equity is one form of musharaka, and we shall see shortly how you can have musharaka other than equity. But in general, these instruments, risk-sharing instruments, act as shock-absorbing buffers. They are shock absorbers in the economy in order to stabilize the economy against the shocks that we have been, continuously seeing, shocks after shocks after shocks. But also, if there are no shocks, these buffers, these shock-absorbing buffers, they will be the engines for growth. So in case of shocks, they will absorb the shock. Without the shock in normal circumstances, these buffers will be the engine for growth. So you can see why it is very important to have sufficient amounts of risk capital available, of course, using proper means and ways to capitalize on these resources. Now, growth requires reinvesting profits to achieve compounded growth, and risk capital actually does this, frees the cash flow of these small and medium enterprises to be reinvested and therefore achieve the growth. Now, how to institutionalize risk sharing rather than, just preaching about risk sharing? We really need to build a framework that will make it institutionalized across the economy. Now, we propose three things. One is rating framework. Second is SMEs capital market. And third, mechanism for hedging or risk distribution. For rating agencies, we are familiar with credit worthiness rating, right? We know that the AAA or AA or B plus or B minus or whatever, these are ratings for credit worthiness. They serve the objective of debt financing, which is good, of course. They are very important. But if we want to have risk-sharing financing, then we have to have a different framework for rating other than credit worthiness rating. So we can call it business worthiness rating that would assess the capability of the company to perform as promised in their prospectus and the business plan. To what extent the company is able to manage the resources and optimize their allocation in a manner that would produce the best results for the stakeholders, including investors, shareholders, as well as the economy. In that manner, with this rating framework, investors will be able, in principle at least, to assess the risk versus the returns of these SMEs, and based on that, they can decide how much to allocate for risk capital for these firms. The next step is to create capital markets dedicated for the small and medium enterprises. The stock exchanges that we are familiar with, they are designed for large companies for a good reason, obviously. To protect the small investors and to protect the public when investing in these companies, obviously these stock exchanges put stringent conditions on which company would be able to list their stocks or equities in the market. But then if we want these small and medium enterprises to be able to access risk capital, we have to design a framework for the requirement for these SMEs to list their shares or their sukuk, musharaka sukuk, in these capital markets. So this would require a different framework, a different set of requirements for these SMEs to list their capital market instruments to be available to investors. So these capital markets, there are already, by the way, some countries who have capital markets for small companies. I'm sure many of you are familiar with NASDAQ. NASDAQ started for those small and risky companies but then those small and risky companies like Apple became so large that NASDAQ is no more the market for small companies. It became the market for large and big companies. So we need to have this kind of capital markets designed for small and medium enterprises to help them access or reach out to investors within an organized framework supervised by authorities and governed by clear standard for disclosure, governance, and operation standards to minimize the asymmetric information as already indicated by Her Excellency Suri Moliani in her speech this morning. So this kind of market is very important. Now, the next step is to design risk distribution mechanism that would reduce the risk for investors without putting additional burden on the SMEs. Of course, if we want to have all the risk on the SMEs, it would become debt financing, and we are back to square number one. Debt financing, to some extent, is very important, but it cannot be the main source of funding, or otherwise these companies will not be able to grow. So what we are proposing, rather than equities, we can think of musharaka sukuk that will represent shares in the assets rather than in assets and liability. So equities are shares in the net of assets minus liabilities. If you are an equity holder or shareholder, you share the assets and you share the liabilities. But for investors who want to reduce the exposure to risk, they can be sharing only the assets, not the liabilities. And this, they are still sharing the risk, but only the risk of the assets. The liabilities will be the responsibility of shareholder. And this is consistent with the principles of Sharia. For example, Rabbul Mal and Mudaraba, he can put a condition to the Mudarib that all transaction must be cash basis. And if the Mudarib decides to buy on credit, then that portion will be the responsibility of the Mudarib. So that means you can have the debt of the business is the responsibility of one party, while the other party is only sharing the asset. It's acceptable from Sharia point of view, and it helps to distribute risk between investors and shareholders in a manner that will discipline shareholders on one hand and reduce the risks for investors on the other hand. Now, these musharaka sukuk will have maturity, but they will be redeemable from the profits of the company. So there is no debt obligation on the SME. It will be paid back from the profits generated from the businesses or the operations of the SMEs. But meanwhile, during the life of these sukuk, the profit will be reinvested. There is no need that cash will be distributed through these throughout the life of the sukuk. They can be reinvested in order to accelerate growth, and by the end of the maturity of this sukuk, they can be redeemed based on the performance of the company. So we end up with a structure that would have no debt obligation on the SME, but at the same time reduce, to some extent at least, the risk on investors. Now, the second level of hedging would be to establish a cooperative insurance fund or scheme among the SMEs. So the SMEs, they come together, they contribute to a fund that would insure these sukuk, at least a portion of it. Let's say the first 10 or 20% loss of these sukuk will be covered by these by the sukuk fund, or this cooperative insurance, for these sukuk. This would help the SMEs themselves to monitor themselves and to discipline themselves in order to reduce the risk and deliver on their performances as promised to the investors. And the third level, finally, is to introduce third-party protection, whether through a third-party undertaking or through khiyar al-shart or various other mechanisms that are acceptable from Sharia point of view. The third party would be a dedicated investment entity funded by blended finance. So the public and social finance, and as well as the private money joining into this, they will not be given directly to the SME. They will be set aside into a fund, and they will issue this protection to the sukuk holders. And this will cover, let's say, the next 20 or 50% of the losses that might, happen to the musharak sukuk. Only SMEs with good rating are eligible for this kind of protection. And obviously, this third party would play an important role in controlling and monitoring the performance of the SMEs, which also contribute to reducing asymmetric information as well as adverse selection and moral hazard. This entity will be also an investor in the company, and therefore you have harmony of interest. All parties have the interest that this company will succeed. So there is no zero-sum game around here. All have the same objective, that the issuer will be successful. Now, this might be helpful relative to debt guarantees. Debt guarantees play an important role in easing the finance constraints on these SMEs, but they might create some problems related to adverse selection. So what we are proposing of this kind of third-party protection on the sukuk might help at least reduce some of these adverse selection problems. So from this framework, having a rating dedicated for risk sharing, having a dedicated capital market, and having a system in place for reducing risk, managing risk, and mitigating risk, we will end up, inshallah, with a better environment for risk-sharing investment in the SMEs without putting any debt burden on these SMEs. And risk is distributed among shareholders, the investment entities, as well as sukuk holders and investors. And this will preserve or open the potential for growth of the SMEs in order to contribute to the value of the economy. Now, this would require, obviously, as already previous speakers indicated, technology. Now, if this network, for example, the cooperative insurance network for these SMEs is through blockchain-based network, this will significantly improve the chances for monitoring and verifying the data and the performance of these SMEs. And obviously, this will not be a publicly network. It will be permissioned network, and therefore only those market players and stakeholders who have an interest in the performance of these SMEs will be members of the network, who would verify and ensure that the data, the information, the announced results are actually reliable, and therefore minimize the issues related to asymmetric information and therefore moral hazard. The next constraint is access to market. That's the other major constraint facing SMEs. And we want to hit several birds with one stone. One, to reduce the barrier of entering new markets and expanding the business of these SMEs, and two, to have minimum costs of doing the business. Now, as it is well known now, online sales or e-commerce is growing with double-digit rates, and they represent a golden opportunity for SMEs to expand their markets, to reach out to segments even beyond the domestic economy, actually crossing the border and reaching out to international markets, which will not only help these SMEs, but also help the economy by, improving exports. So the growth potential is substantially expanded once we introduce e-commerce for these SMEs. Now, there are many, of course, challenges to this, and we need to build the infrastructure for e-commerce for SMEs, which require the collaboration, of course, of the authorities and policymakers. After the crisis, as we all know, the interaction of customers with digital and internet or online commerce have increased substantially, as data can see from the data in this figure. Now, if we look at the online business-to-business e-commerce worldwide, you can see that how it is growing substantially. In 2000, for example, 16, it was about 8 trillion, and in 2022, it is now 22 trillion, and they are expected to reach 30 trillion in 2024. So we have a huge opportunity for e-commerce, business-to-business, markets, whether domestic or international. Now, if you move to business to customers or business to consumers, you can see also, although this is not the same size, but you can also see how it was about 3 trillion in 2018, and 2022, it's about 5.5 trillion, and it is expected to even go beyond that to about 7 or more trillion US dollars. So the markets are growing, but here's the point. Now, the percentage of e-commerce of the total retail sales is still another percent in order to have complete retails to be online. So there is a huge potential for e-commerce in the coming years, inshallah, which means the SMEs and other big players, other players in the trade market, they have very large opportunities to reach out to businesses and to consumers. Now, once you have B2B, business to business, and business to consumers online, that means the entire supply chain now is automated. You have the full supply chain now online, and that means you can reduce the costs substantially and optimize the efficiency. Each entity or each firm will optimally choose its suppliers and optimally choose its customers in order to improve its performance and deliver on the expectations of the shareholders and the investors. One very important point is that with online sales, the standard modes of financing like murabaha or salam will be straightforward, because you have very transparent system. You can monitor the good, where it is now, the warehouse, the shipping, the handling, and every step is verifiable and monitored, and therefore financing trade from this perspective will be straightforward. Obviously, we talked about risk capital financing. That's a very important component, but also on the revenue side, We can also consider or add to the portfolio trade financing through various, modes of financing of Islamic finance. The point is that with e-commerce and with online sales, the implementation of Islamic modes of finance will become straightforward. We don't need any more commodity murabaha to manage liquidity. We do have direct, real businesses, real commodities, real goods and services that would serve the customers, that would add value to the economy with obviously proper credit mechanism for financing. So let me conclude. Through risk capital and e-commerce, the SMEs, they can break the barriers of various fronts. The environment, not only they break the barriers, but also the environment will become Islamic finance savvy. We will be able to implement Islamic finance, both risk sharing and debt-based financing, in a very straightforward, transparent, efficient manner with minimum asymmetric information or adverse selection. Islamic finance, therefore, will become an engine for growth and values for the economies of our communities. Thank you very much for listening. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Sami Al-Suwailem, for your time. Ladies and gentlemen, we have seen together the opening of the 6th Annual Islamic Finance Conference. Next on the program is the presentation parallel session of the AIFC papers.
In advance of this conference, we held a call for paper event for the general public and young researchers. 20 papers have made it to the shortlist of IFC papers for 2022, and they will have the opportunity to be published in reputable academic journals as well as prizes. And we'll now be moving to the call for paper presentation that will separate into 5 Zoom rooms. You are pleased to visit the room which discuss topics that you might find interesting.
Yes, and in the Zoom Room 1, we have Digital Transformation and Islamic Economy.
Following with the Zoom Room 2, Green Economy, Circular Economy, Business and Clean Technologies.
Zoom Room 3, Halal Economy, Islamic Entrepreneurship, MSMEs and Startups in Smart Economy.
And Zoom Room 4, Islamic Social Finance and Innovations for Productive Economy and Poverty Alleviation.
Last but not least, Zoom Room 5, Public Policy and Institutional Development in Islamic Economy.
And as you can see on the screen, you can scan the QR code or type the link to enter the Zoom room. The session will run for about 2 hours and will end at 11:35 a.m. After the presentation ends, we encourage you to enter the webinar room link just as this morning. We will resume the rest of the day 1 at 1 p.m. after the break.
Good luck with the presentation
and have a fruitful discussion.
of Allah, the most gracious and the most merciful. Ministry of Finance Indonesia presents
Islamic finance can play a significant role in enhancing financial inclusion in countries with dominant Muslim population.
In the last decade, Islamic finance has been one of the fastest growing sector in the global financial industry.
the annual Islamic Finance Conference AIFC firstly started in 2016 in Jakarta, then continued in Yogyakarta, Makassar, and Surabaya. AIFC is an annual series of events that brings together a wide spectrum of stakeholders to discuss various keys of Islamic finance, economic, and development issues. In 2022, the 6th AIFC is held within the same year as Indonesia's G20 presidency. This year's conference bears a very important theme: Islamic finance role in MSMEs empowerment, boosting capability and fostering inclusiveness for sustainable future. Recover together, recover stronger.
In the name of Allah, the most gracious and the most merciful, Ministry of Finance Indonesia presents. In 2022, the global risks have shifted from COVID-19 pandemic to global economic pressure. High inflation escalated by geopolitical conflicts between Russia and Ukraine has caused commodity price surging. Tightening monetary policy on global financial markets caused by high inflation has driven capital outflows from emerging markets. In the middle of these uncertainties, Islamic economy is proven to be resilient and still growing. Islamic finance assets grew 7.8% year-on-year in 2021 and are expected to grow by 8.0% in 2022. Investments in the Islamic economic sector across OIC and select non-OIC markets grew by 118% in 2020-2021 compared to 2019 and 2020. In line with this global trend, Islamic finance in Indonesia also grew positively in 2021 based on the State of the Global Islamic Economy Report 2021. Indonesia is among the top 4 countries that has significant development of the Islamic economy in the world. Meanwhile, Indonesia's halal food industry is listed as the second largest in the world. The main pillar of the Islamic economy is real sectors and the principle of Islamic finance, which are in line with spirit of MSMEs, value inclusive, free scams, innovative transactions. In Indonesia, MSMEs accounted for 97% national workforce, 60% investment, cover around 99% of business, playing a key role in economic growth and sustainability. However, MSMEs are facing a lot of challenges when of they are financing access. Bank Indonesia survey show that 77.95% of MSMEs were negatively affected by the COVID-19 pandemic in 2021. The main problems are declining revenues and increasing operational costs. Islamic finance brings solution to this dilemma by Islamic Integrated Financing Framework for MSME Ecosystem Improvement, linkage program among banks, fintech, financial institutions, and insurance to support MSMEs. Therefore, Ministry of Finance Indonesia proudly presents the 6th AIFC, focusing on Islamic finance role in MSMEs empowerment, boosting capacity, and fostering inclusiveness for sustainable future. Recover together, recover stronger.
Assalamualaikum warahmatullahi wabarakatuh.
Good afternoon and welcome back to the 6th Annual Islamic Finance Conference, Islamic Finance Role in MSMEs Empowerment, Boosting Capability and Fostering Inclusiveness for Sustainable Future.
We hope everyone is ready to start the conference again.
Ladies and gentlemen, we will continue the conference with panel discussion, carrying the topic of MSMEs empowerment, concept, challenge, and strategy with the experts. We invite you to join the discussion as well by submitting your comments, talks, and questions in the link fiscal.id/6AIFC2022, which the panelists will then address during the Q&A session. Please state your name, your institution, and to whom the question is addressed to, followed by your question.
This session will be moderated by Advisor for International Trade and Industry to Indonesia's Finance Minister, Dr. Kiki Feriko. He is also a senior lecturer of the International Economics at the University of Indonesia's Faculty of Economics and Business and the Associate Director of the Institute for Economic and Social Research. Dr. Kiki holds a Doctor of Philosophy degree in International Studies, Regional Economic Integration from Waseda University, and is the sole author of The Future of ASEAN Economic Integration, which was published in 2017 by Palgrave Macmillan, the UK.
And our panelists are Deputy Minister of Entrepreneurship, Ministry of Cooperatives and SME of Indonesia, Mrs. Siti Aziza, Head of SME Policy, State Secretariat for Economic Affairs, SECO of Switzerland, and Chairman of the OECD Committee on Small and Medium-Sized Enterprise and Entrepreneurship, Mr. Martin Godel, and also Director of Economic Empowerment Department, ISDB, Dr. Nabil Goleb.
And before the session begins, I'd like to invite all the panelists and discussion chair up to the virtual stage to take a picture together.
So let us invite Dr. Kiki Feriko, Mrs. Siti Aziza, Mr. Martin Godel, and Dr. Nabil Goleb for the photo session. Please have your video camera turned on for a moment.
And on the count of 3, 3, 2, 1. Thank you, panelists and chair.
Yeah, and now we'd like to hand over this session to Dr. Kiki Ferrico to lead this discussion.
To Dr. Kiki Ferrico, you may have the floor.
Yes, thank you very much. I have the screen now. All right, thank you for kind introductions, MCs. Welcome to the first panel sessions. We are going to talk about the micro, small, medium enterprise empowerment concept, challenge, and strategy. We have 2 hours time allocations, and we together with us already 3 prominent speakers, distinguished speakers, Ibu Siti Aziza, Deputy Minister of Entrepreneurships, Ministry of Cooperatives and SMEs Indonesia. Selamat siang, Bu. And Mr. Martin Godel, I think, is already with us as well, Head of SME Policy, State Secretariat for Economic Affairs, SECO of Switzerland, and Chairman of OECD Committee on Small and Medium-Sized Enterprise Entrepreneurships, or CSMEE. Good morning, Mr. Martins, from, I believe you are in Switzerland at the moment. And Pak Nabil Galib, Director, Dr. Nabil Galib is a Director of Economic Empowerment Departments, Islamic Development Bank. And today, as a theme, the topic, we are going to talk about the MSME empowerments from countries' perspectives, from Indonesia case, from Switzerland, and also in completion with the OECD perspective from Pak Martin Godel, and last but not least, economic empowerment interventions, concept and applications from Pak Nabil Galib. But before I hand over the session for each of speaker, because each of speaker have 10 minutes, up to 20 minutes presentation for each of speaker, and then followed by question and answer. So each of speaker can have 20 minutes, up to 20 minutes to share their thoughts. And before that, I need to read the CV, short CV of the speaker. Let me start with, according to the latest rundown versions that I'm holding, we will start with the Ibu Siti Aziza. So let me read Ibu Siti Aziza short CV. She's a Deputy of Entrepreneurships for Ministry of Cooperative and SMEs of Republic of Indonesia. She holds undergraduate degree in Urban and Regional Planning from Bandung City of Technology and Marketing. And then prior to this position, she has several roles in, for instance, HSBC Indonesia, Asuransi Signa, Sestama Medio Solusindo, Atikah, Amin, Amanah, all the private companies. And then our second speaker will be Pak Martin Godel. He holds a degree from University of Geneva, the Graduate Institute of International Development Studies, for master degree in Law and Diplomacy from Fletcher School administered by Tufts and Harvard. And then prior to these positions, Pak Martins holds several roles as a delegations for negotiations in international fora and also bilateral within WTO and FTAs, and also have experience in Japan as a head of Swiss Business Hub Japan in the Embassy of Switzerland in Tokyo, supporting Swiss and Japanese companies, and many other roles related to international trade and also small medium enterprises. And last but not least, Pak Nabil Galib, PhD. He holds a PhD degree in finance and master degree in financial engineering from HAC Montreal University. And prior to his position in Islamic Development Bank, Dr. Galib was the chairman of the founding CEO of Zitouna Tamkin, the first and sole Islamic microfinance economic empowerment institution in Tunisia. I hope I pronounced it correctly. And now he's the director of the Economic Empowerment Department, Economic Empowerment Department at the Islamic Development Banks, and leading MDB's initiative aiming to institutionalize mainstreaming and implementing economic empowerment models for the OECD member countries. So he's a very prominent and right person to talk about this topic as well. So without further ado, we have 20 minutes for each speaker. I see someone raise hands here. Turn off virtual background. It worked during session. Okay, this is the problem, technical problems. I hope that committee can help Pak Martin to solve his problem. So now, without further ado, we start with Ibu Siti first. Ibu Siti already with us. Please, Bu, Ibu have 20 minutes for presentations, and I believe the committee has also provided a timekeeper to make sure the time is correct. Okay, please, Ibu Siti, the screen is yours now.
Okay, thank you, Pak Kiki. So, Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone, and also good morning for Pak Martin, who are in different time zone. So, first of all, I would like to thank the team for the invitation to us. So, this afternoon, I will share on the what we have on the concept, challenge and strategy on MSMEs. So let me start the slide, please. Okay, so MSMEs empowerment, which is with concept, challenge and strategy. So currently we have Indonesia as MSMEs with the current condition. Next slide, please. So, okay, if we are talking about the MSMEs, actually Indonesia have about 64.1 million, which is mostly are coming from micro enterprise, which is almost 99.6%. Micro economies dominate the total portion of the pyramid, which is majority are economic subsistence. And then what we have is what we are looking at on the business literation, low, and then the limited access to the bank. While for small medium enterprises, we can say that the majority end of product compete with the large enterprises, and then only few enterprises working in supply chain, which is generate value creation and focus on commodity. So if we are looking at the portion or a contribution to the population, 99.5% of population on a business in Indonesia currently are MSMEs, which is contribute about 61% on the PDB and 96.9% in workforce. If you look at the contribution to the export, currently at 15.6%, and then investment about 60%, and lastly is about digitalization on the 60.6%. So if you are comparing to the other countries, we can look at this portion, which is currently Indonesia at 13% on digital transformation, and we are looking at 47% in the 2024, which is much lower than other countries like Japan. So next is the ecosystem of the Indonesia MSMEs. So if we are looking at the ecosystem itself, so actually on the market, policy, finance, culture, and support, and human capital. So in detail is if we are talking about institution, that's related to institution, leadership, and regulatory framework. While if we are talking about finance, we know that we have banks program, private equity, venture capitalists, P2P lending, debt, and crowdfunding. So these are actually the six part. It will be a part of Indonesia MSME's ecosystem. Not to mention about human capital, which is early stage and established. And then, on the market side, we are looking at the distribution channel, community, marketplace, and platform, digital, and export. So next, if we are talking about MSMEs, we can say that contribution of MSMEs to Indonesian economy based on the data from Bank Indonesia, that the ratio of the bank lending to MSMEs in the first quarter of 2022 to the gross domestic product. So bank loan distribution is about 7.15%. Although it decreased on a quarterly basis, this figure actually increasing on annual basis compared to 2021. So while the MSME's contribution to the national GDP is about 61%, or in rupiah is 8,573 trillion, and 97% absorption of labor. In Africa crisis period, we can say that MSMEs even become buffers, very resilient, and can recover well. So as of June, at least 19.6 million MSMEs have digitally on board. So this figures means additional 1.3 million since the start of pandemic. So about 30.15%. While we have targeted on the 2024 that we can achieve about 30 million SMSEs onboarding digital. Next, if we are talking about acceleration strategy on the digital transformation, we have seven aspects here. One is about marketing access, production, and then the financial aspect, organizational management, and productive or production capacity, and access to supplier, and the last is about distribution or logistic aspect. So the strategy to transform on the transformative recovery is about transformation from formal to formal business. So we know that currently we still have a lot of MSMEs on the informal business side, while the transformation into the supply chain, we also looking at this as one of the strategy. And the third one is modernization of cooperative. We are looking at about 500 modern cooperative. And the fourth is productive entrepreneurial growth. Currently, we are at the 3.18% entrepreneurship in Indonesia, and we are looking at about 4% in 2024. And then we hope that the startup growth will continuously until 2024. On the digital transformation and utilization of technology, we are looking at about 30 million MSMEs onboarding digital. On the government procurement, we also have strategy, which is 40% of the MSMEs. We hope that can serve all the government expenditure. Next, this is the strategy on the entrepreneurship program on the 2022 forward. One is about incubation. Why incubation? Because we know that from the market, from the public, from the MSMEs actors, we know that they need the incubation process. So we have this as one of the program. And the second one is digitizing of MSMEs. And the third one is integrated business service through PLUT, we call it PLUT, or pelayanan usaha terpadu, which is currently we have in the 74 kabupaten kota spread all over the places in Indonesia. And we hope that this will be MSME's house. The third one is we also have a big program on single data. We are now collecting all data from all MSMEs in Indonesia, and we hope we can collect about 14.5 million this year. And we also helping on the financing, which is alternative financing. This is we have a program we call Entrepreneur Financial Fiesta 2022, where we have a we are doing business financial pitching up to business matching between MSMEs and the venture capitalists. And last but not least, of course, we need collaboration with the other sector. Next, what is the innovative financing for MSMEs in Indonesia? You know that we have bank and non-bank. Currently, a lot of MSMEs still unbankable, unfeasible, and then they're not yet connected to the bank. So we can call the micro loan program or Kredit Usaha Rakyat, which is the target for this year is about distribution target for this year is about 373 trillion rupiah, which is will be increased in next year. And the interest of this core is about 6%. So really helping, the MSMEs to improve, to increase their business. And the funded sector, there are restrictions still on the of core, but all the economic sector can be granted to core. So loan limit for core is up to 100 million rupiah. While non-banks, we are looking at the angel investor, venture capitalists, and startup fintech. So this to help the MSMEs connect to the financing, to help them to access to funding, financing through a venture capitalist association and EFF. So this basically what we are looking now, what we are working on, the innovative financing for MSMEs in Indonesia. Next, if we are talking about the opportunities, we still have a lot of opportunity for MSMEs development. One, if we are talking about population, we will have 64%, almost 65% young people. This is a big opportunity for us. And Indonesia's digital economy is projected to reach about 4,500,000,000,000 in 2030. This is the largest potential in Southeast Asia. And digital economy to support SDGs is also opportunity for us, where Indonesian Chamber of Commerce and Industry program carries out CSR in collaboration with startup companies. And if we are looking at the on the actor side, people business credit will be increased to 373 trillion this year. And then, of course, increased portion of MSMEs loan by at least 30% by 2024. That's our target. And, we look at another opportunity on the market where 40% of government expenditure is expected coming from the MSMEs through LKPP. So this is, give us a picture on what is the opportunity for MSMEs in the market. Next is, of course, there is also a challenge. One is we can say about literation, and then financing, and last but not least is education. On the literation side, financial literacy, like management and financial record, banking, non-banking financial product. This is still a bit low. And then, digital literacy and facilitation. And so that need to be, that's our challenge that need to be improved. On the financing side, the several alternative sources of financing, we also want, ask them to give very easy and cheap sources of financing. This is our challenge. And of course, the scheme, according to the nature of the MSMEs itself. On the education part, we also have some challenges, which is we need to strengthen the education for the product development and market access. And of course, to, give education on the digitalization. So I think this is will be my last presentation about the challenge, opportunity, and strategy. So all in all, as Indonesia still have a big opportunity for MSMEs to grow, and we hope we can collaborate with all stakeholders to increase or improve the portion of MSMEs.
Thank you.
Thank
very
you,
much.
and
thank you very much, Ibu Siti, for really interesting presentations, comprehensive. and also very timely. Actually, you still have about 5 minutes, so we really appreciate your time management. And as Ibu Siti mentions, from starting to the end, talking about the contribution to the economy, labor absorptions, and the roles of the inclusiveness from the bottom-up approach, the economy with the digital, including digital financing, fintech, and also talking about the opportunities and the strategy that I saw about the literations, financing, educations is a very comprehensive, and already answered basically 3 basic questions that the committee has provided on the ecosystem of the micro, small, medium enterprises in Indonesia and financing the MSMEs, and also the opportunity and challenge. So we will continue to next speaker, Bu, but I'm going to lead the question and answer sessions right after the third speaker's delivered his thoughts. So if Ibu still here or someone who will represent on behalf of Ibu, I will pass maybe 1 or 2 questions after the third presenters presents. Is it okay, Ibu Siti?
Yeah, okay, Pak Riko, I will be, have another meeting on the 2 o'clock. So, but the assistant of deputy will be here to answer all the questions coming from the audience. So again, I'm so sorry about the time management.
No, it's okay. No, we really appreciate your attention. Thank you very much, Bu Siti. Thank you very much.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, before we move to question and answer, as I mentioned, we move to the the second speaker. And the second speaker, Pak Martin, will talk about the experience, best practices, and from also multilateral perspective from the OECD, as Pak Martin also have roles in the OECD. Okay, without further ado, Pak Martin, the screen is yours. You have also 20 minutes, Pak Martin. Yeah.
Thank you very much. And just to make sure, can you see the screen well?
It's clear.
Excellent, excellent.
Yeah, your voice also clear.
Thank you very much. I would like to welcome everybody for this session here and the opportunity to have this exchange. I will briefly give you an overview on a few points of the micro and small and medium-sized financing in Switzerland, but also overall maybe of SME policy in Switzerland. Then as I, one moment. As I also chair the OECD Committee on Small and Medium-Sized Enterprise, I also would briefly touch on this, on the new recommendations that have been passed on SME policy by the OECD, as well as the scoreboard on financing SMEs, as it might be of particular interest to participants. Then when I talk about the MSME or SME, we usually just use the term of SMEs, but we include micro companies, of course, in it, because they are really, really important in the Swiss ecosystem of our world here in the economy here. So what do we have to see? What is the situation? SMEs represent more than 99% of Swiss companies and create about 2/3 of the jobs in Switzerland and a little bit less than 2/3 of the GDP. So this is almost a full glass of water. It is a very strong, very clear SME-dominated economy that we find here in this country. So what is our focus on in our SME policy? We focus on framework conditions, and framework conditions include many different things. Most importantly, cutting red tape, give a good regulatory environment, that the laws are clear to read, to understand, to apply, that bureaucratic procedures are kept to the minimum and are as efficient as possible. Then we develop e-government, which is an important access. So in these couple of years, when I talk about e-government, we mean business to government. We believe that in the future, the business to government transactions should all be digital. So no papers, no stamps, no seals, no anything, but digital. And this also is very helpful in various ways. It gives transparency, it keeps records, it reduces most of the risk of corruption. It has all types of advantages that we can also track customer satisfaction, challenges and difficulties in going through bureaucratic procedures can be easily recorded. So there is a lot of possible advantages. That's why we invest a lot into e-government. Then improving access to international markets is another key element. Free trade agreements around the world, also with Indonesia, so that SMEs can have a direct access to international market. Promoting education, research, and innovation is key to SMEs, so that they have a skilled labor force. Skilled labor force is the fundament for all SMEs, as they depend on the educational support by the public service, so that the public provides excellent education, so that afterwards SMEs can recruit high-skilled people for their companies. Making SME financing easier, that is of course an important part, and this is also of this topic and discussion here today. What is most important for us is that the financial market can support and finance the SMEs directly, which means without government support. So the government, the biggest job is to create very good regulations for banks, so that banks are then in turn capable to provide access to financing for SMEs. In order to monitor this, we do a regular survey on SME financing, which is a representative survey, the last one in 21, that was last year. That most important element is that current access to bank loans are good. Only about 3% of all loan applications were rejected. Of course, we have here a specific and special situation with the COVID crisis that negatively affected SMEs strongly. They had to rely much more than usual on external financing. In the past, 62% of SMEs were entirely self-financed without, of course, they do have bank relations, but they don't have debts. But since 2006, since the last survey, this share has been temporarily decreased because of the government COVID-19 loan guarantees. So they increased their debt during the COVID-19 crisis. We hope this will reduce again over the next couple of years. Venture capital is another very important axis of development that we want to strengthen. It is well developed. However, we believe that there is much more potential in that market than is currently used. Another government-supported SME financing tool are the loan guarantees. It's a niche offer in a functioning credit market. by 3 regional loan guarantee organizations and 1 special loan guarantee organization for women, that they support SMEs, providing guarantees that then afterwards the SME can go to the bank and receive a bank loan collateralized with the security by the loan guarantee backed by the federal government. And let me go to the OECD recommendations on SME policy. As said, I'm also chairing the Committee on Small and Medium-Sized Enterprises and Entrepreneurship at the OECD. But we have also several non-OECD member countries who are participating in the meetings and also share or joined these recommendations. What are we doing and why did we come up with an SME policy recommendation? We see that many governments around the world are looking to develop a more integrated policy area, which means it's transversal. Transversality, whole of government is necessary. Sorry, I hear. Okay, thank you. Transversality, whole of government nature is very important in SME entrepreneurship policy. It is not possible that one ministry or one agency can just ensure a good SME policy for all. As I have indicated in the beginning, most important for SME policy is good regulatory policy. And good regulatory policy includes, of course, the tax office. It includes the business registries, the commercial registry. It includes environmental policy. It includes zoning policy. All these areas are affected by good SME policy, and that means transversality. However, it is that these recommendations establish a clear common policy framework for SME and entrepreneurship policies, so that countries can get like a large toolbox of which they can serve themselves and create and design their own SME policy that takes into account local idiosyncrasies. This is not a one-size-fits-all approach. It has to be really designed for each country. However, it can also be used to check a national SME policy to understand, do we have certain areas where we have strength and others where we don't have developed yet anything, so it can also be ground for new ideas. So what does it do? The OECD Ministerial Council on June 10th has adopted these recommendations. They are built on 15 guiding principles, providing a coherent and strategic approach to policies for SME and entrepreneurship, encompassing a mix of targeted and horizontal measures. And there we have these 3 pillars: policy coordination and governance, transitions and resilience measures. There is also like the digital transition that you have mentioned, but also the green transition. Those are the major transitions, then resilience to crisis. And pillar 3, access to resources. This is not only access to financial resources, but all types of resources that are necessary. And here to the right, you see the recommendation as it has been passed. Then what is included in the pillar 1, policy coordination and governance. We have here a whole of government approach. It is important to have certain bodies that are looking out for SME policy that are encompassing all government and multi-level government, including all the various agencies, and then also cross-cutting approach to diversity of SMEs and entrepreneurs, and monitoring and evaluation like we do in this survey that I have mentioned, on the areas. I will not go through all of these, but it is important to see that this heterogeneous approach here, access to resource, we have the basic here on the finance, but of course innovation is very important. How do companies get through the innovation, and then skills and entrepreneurial mindset, ecosystems, and public procurement, as has been mentioned by even Citi before. OECD scoreboard on financing SMEs, and then I will conclude. I just would like to mention this because the participants of this conference might find it interesting to check it out. It is on the web by the OECD. It brings out every 2 years a flagship publication to improve the evidence base on SMEs and entrepreneurship finance. It's probably the most encompassing data set internationally on SME financing, including financing conditions, asset-based and equity financing, bankruptcies and late payments for 48 countries. So it's not only OECD countries, but also many other countries, and it gathers official data from ministries, central banks, and statistical offices, and others. Policy implications that are always highlighted by this biannual publication. That we see, of course, financing support is being phased out by the COVID-related loan guarantees that have been used widely in many countries. That leaves SMEs with a certain level of debt, in some cases large levels of debt, and that also calls for strengthening the diversification of SME financing and in various ways. Here I would also would like to indicate the G20 OECD high-level principles on SME financing that are well integrated and well coordinated with the SME, with the OECD SME financing scoreboard, and then take additional action to support SME investments in the green transition is another topic of this year's element. Here, the key players of this the special OECD platform on financing SMEs, that is like a sub topic, but a very important topic on SME financing that we're working together with public, private banks, fintech companies, SMEs, and governments in order to strengthen finally SME financing that is necessary to make the green transition, as it requires quite heavy investments by SMEs. In case you're interested, we have here a few websites on our side. The SME portal, that's for Switzerland. This is the public website that is dedicated for entrepreneurs in Switzerland, that gives like an overview of what needs to be known for financial literacy, regulatory literacy, and management literacy, so that all entrepreneurs can find whatever they require to run the government. And then the one-stop shop for SMEs for business to government transaction, easygov.swiss. Please have a look. Most of it is also translated into English. I thank you very much.
Thank you very much, Pak Martin, for your presentation. It's very complete from country perspective, specific country perspectives, and also from the multilateral OECD perspective. I take note here from the contributions of SMEs in Switzerland. So 90% is quite high. It's very high actually, even more than Indonesia contributions. And then observe to third jobs absorptions. And you mentioned about efficiency of digitalizations. Why focus on digitalizations? You mentioned no need to have a stamp, seal, and etc. for the administrative things, and it saves times and efficiency as well. And then you mentioned about interventions market in relations to the step-by-step from OECD, good regulatory framework. and also 15 guides, principles, and then pillar 1, pillar 2, and pillar 3. And I saw that in the pillar 2 is very interesting to see. You mentioned about transitions. I believe that transitions are very important issues in these uncertainty situations, and also the remains challenge that we have in the world now. Some SMEs all around the world are facing this challenge about the transition in digital and the transitions in the green and economy, and not to mention the international network challenge that you also touch this issue. I think all these inquiries that provided by the committee have already answered by your presentations, but I believe that we still have some questions following up your comprehensive presentations. Thank you very much. We really appreciate your knowledge sharing, Pak Martin. Okay, please stay with us, Pak Martin, until question and answer session until it's finished, as it's done. And then last but not least, we are about to hearing about the perspectives, multilateral perspectives from Islamic Development Bank that will be presented by Dr. Nalib, and then Nabil Galib that will present about the how the Islamic Development Banks in particular seeing these macro small medium enterprises in particular in financing aspect, but also not only particular aspect, but also talking about the more general or maybe best practices that the Islamic development banks can share with us today. So without further ado, Pak Nabil Galib, the screen is yours. You also have 20 minutes, Pak. Thank you very much.
Thank you very much. بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه أجمعين. Thank you very much, Dr. Kiki. It's a pleasure to be part of this panel session, very, very important, and dealing with the very important topic to our member countries as multilateral institutions serving 57 member countries. Can I have the slides, please? Yes. So my presentation, I will try to explain what we do at ISDB, and especially I will share with you our economic empowerment interventions that in first place that was developed basically to alleviate poverty and to serve micro businesses. However, we developed this approach to be also applicable to micro, small, medium enterprises, because at the end of the day, the challenges facing businesses are more or less the same. Next, please. I will talk about three different main topics. I will share with the audience an overview on the evolution of ISDB MSME support. Then I will present our economic empowerment approach as a paradigm shift from the financial inclusion to a kind of economic inclusion, a more comprehensive, a more inclusive approach to serve the business. And also I will share with you our experiences as ISDB group, because as you know, ISDB is a group with a good number of entities serving the private sector, the trade finance, the credit insurance, the poverty alleviation, and I will probably share with you an overview on the different efforts deployed to support MSME development. Next. Next. Yes. Basically, we start our journey in 2000, whereby we started to finance microfinance interventions to alleviate poverty in our member countries, and then we evolved based on a lot of failures, successes, and a lot of empirical experience, and we built up what we call economic empowerment approach that I will explain later on. And the main idea is to basically enable target beneficiaries to play a more active role in their economies and make them real actors in the development. So far, we financed 62 interventions with the total envelope exceeding 600 million. This is for fully fledged economic empowerment interventions. However, when you count the other infrastructure projects whereby there is small component of economic empowerment or microfinance, this envelope surpassed $1 billion. And these efforts led to the creation of 1.4 million jobs. And of course, we leverage on this amount to mobilize billions of dollars as well. We have a good track record of successful interventions in different countries, namely Palestine, Tunisia, Indonesia, Sudan, and many other countries. And we are proud that our interventions won a good number of awards from prestigious forums all over the world. Next. And despite the success of this previous ISDB interventions, we understood quickly that to mainstream the approach and to make it a global initiative, this requires a holistic vision and a genuine support. And this is why the ISDB foresaw the potential of this economic empowerment approach, and we chose to make it like the tool to achieve our vision to empower poor and vulnerable categories and enterprise in our member countries. And this is why we create the kind of one-stop shop, a fully dedicated department called Economic Empowerment Department that was established first under the prison complex, and then it was moved to the operation complex. Next. Next. So now when we talk about the economic empowerment approach, we, based on our 22 years of experience, we understood that there are some barriers facing MSMEs and facing people for being empowered. Number one, there is difficult access to well-designed and profitable project opportunities. And this is why ISDB and our arms, funds, and institutions and programs, we act like an investment bank for vulnerable populations and enterprises. And we send our experts to basically design economic opportunities, investment opportunities that are in line and that take into consideration the competitive advantage of the regions we tackle and the capabilities of the beneficiaries we serve. So this is number one barrier. Number two, there is a lack of intelligent partnerships, of smart partnerships with the public sector, with the NGOs, with the private sector. And this is why we work as an agent, you know, to find this common ground, this triple win relationship between the private sector, between the public sector, between the beneficiaries, between the MSMEs, and we do that depending on the project and depending on the intervention. There is a lack of affordable and supporting infrastructure that may block a potential of a whole region, and this we work in collaboration with our partners to basically put in place basic infrastructure, affordable ones, to help MSMEs basically in the regions to flourish and to become effective. There is difficult access to relevant markets. We work a lot with off-takers. We try to secure markets for our MSMEs. There is a lack of capacity, and we believe in self-potential, so we build these capacity building programs, and we make sure that the entrepreneurs and MSMEs, become self-confident, and they know exactly what to do, and they become independent when it comes to take their economic decision. And of course, there is difficulty to get access to an affordable and appropriate funding. And one of the advantages of Islamic finance is that it's flexible, it's agile, and it takes into consideration the cycle of the production and the cycle in which the MSMEs is located. Next. Next, please. So based on this, next, please. Based on this experience, we talk about a paradigm shift. So we moved from the financial inclusion that offers mere financial services from microinsurance, saving, financial education, loan for basic needs, to something much more inclusive, much more bigger. That starts with business, with providing the business opportunities, with connecting people with the smart partnerships, with securing market to them, with providing them support infrastructure and support investment, building capacity programs and financing. So we put all that in a kind of full package, and we do that in, as I said, in collaboration with our partners in our member countries. Next, please. We have a one-stop shop called Economic Empowerment Department in charge of mainstreaming the economic empowerment approach in our member countries, in charge of serving vulnerable enterprises and categories and populations. And we do that through four main modes of intervention through the economic empowerment funds, the economic empowerment institution, the economic empowerment programs, and the seed. I will explain that later on. In terms of funds, we build up or we establish a new impact investment, MSMEs, or economic empowerment funds, or we participate in a brownfield one, existing ones. And basically, we can establish regional funds or country-specific funds. Also, we can also establish institutions which will be our technical arm to deploy our approach in our member countries. And usually this institution, we provide tailored package that includes three things: a limited exposure in terms of equity, a line of financing to expand operations, and a grant basically to upgrade the model, the business model, from financial inclusion business model to a kind of economic empowerment business model. So the funds and the institution, we qualify this as non-sovereign interventions, but also we do several sovereign interventions, and we deal with the governments through economic empowerment programs. We design, we structure, and we execute in collaboration with our regional hubs deployed in 13 regions in 5 continents. Economic empowerment programs are basically financed and funded by IDB against sovereign guarantee, and we hire executing agency to make sure that they deploy our methodology on the ground. And usually these programs, are microfinance, economic empowerment, MSMEs programs, and we have very successful intervention in that field. Also we have what's called solution engineering and entrepreneurship design, and basically we collaborate, and the main function of this is to collaborate to mainstream the economic empowerment approach. So we try to enhance our job by developing customized packages, toolkits, manuals, fintech solutions, MIS system, and the ultimate goal is to help vulnerable enterprises basically to be equipped with the right tools to be able to resist and to be resilient in a very aggressive economy. Next. So this is in a nutshell our business model on the ground. It's basically based on building the right ecosystem to an effective win-win business intervention. So we have to find this common ground whereby all the stakeholders should have a kind of win-win relationship. Next. This is the operating model. Our main donors. So we use sovereign funds. We use sovereign money. I mean our OCR. We use also funding from ISFD. And we channel this through the funds, the institution, the programs, and the seed has cross-cutting role and is serving the 3 modes of intervention basically to serve our beneficiaries. And we do that in collaboration with the strategic partners from NGOs, public sector, private sector. We are firm believer in the role of private sector, and this is why when we structure our vehicles, we want to make sure that really they're attractive to the private sector in terms of risk profile, in terms of return expectation, and so on and so forth. Next. So these are some selected examples of successful interventions. We don't have time to go through this, but just as examples, let's say in Tunisia, we developed 7 value chains, 7 economic empowerment interventions around value chains. In 3 years' time, we created 14,000 job projects, and we created 40,000 jobs. In the pipeline, we built up 20 value chains projects, and a good number of them have been awarded and recognized by different forums in the world. Also in Palestine, we started the program with 10 million, and then we mobilized 151 million coming from other donors, although the sensitivity of the country. 16,000 projects have been funded basically to support Palestinian families, 52,000 direct and indirect jobs created, and now this deep program has been transformed and upgraded to an economic empowerment fund for Palestinian people with 500 million. And as we speak, we expect to launch the operations by the end of this year. Next. This is an overview on our pipelines in terms of fund for over the next 3 years. We have a plan to serve 15 member countries with 3 country-focused economic empowerment funds and a couple of regional funds, basically tackling food security and agriculture, and the MSMEs will play an active role in that. The ISDB commitment will be around 130 million, and we will leverage on this commitment basically to mobilize 800 million. We deal with a lot of MDBs with the private sector, as I said before, and with a lot of other stakeholders, philanthropists, NGOs, and all and different partners that are interested in this economic empowerment approach. Next. This is the pipeline of our programs over the next 3 years. We have the plan to serve 6 member countries through 7 programs. 50% are LDMCs. We are talking about a portfolio size of 550 million, and governments and financial institutions and MSMEs are our main partners in that. Next. With regards to the institution, we try to be very selective because in our strategy, we don't want to take equity stake in this institution, but these institutions are still important to deploy our economic empowerment approach. We have in the pipeline 6 institutions to be established over the next 3 years. Next. Also, we have been very active during COVID-19 crisis. As you know, it affected MSMEs hardly, and we built up or we designed a program called SERVE. And SERVE stands for Strengthening the Economic Resilience of Vulnerable Enterprises, mainly the micro, small, and medium enterprises. And the main objective of this SERVE program is to build the resilience of affected MSMEs to endure and overcome the pandemic crisis in our member countries by providing a financial facility package through financial institution partners. As you know, ISDB has a huge portfolio of 120 financial institutions we deal with, or we even created in more than 60 countries. So basically, this is very, very important network for us to deploy and channel our money to reach out MSMEs and to increase our reach, our reach, and to make our interventions much more impactful and efficient. As we speak, we serve 7 member countries. We have in the pipeline 7 other member countries. The approved portfolio size so far is 100 million. In the pipeline, we have another 100 million. Against this 100 million approved, we leveraged 324 million resources from government and financial institutions through funding matching. And the ultimate objective is basically to maintain and or created 300,000 plus jobs, plus serving 150,000 plus MSMEs. Next. We are working also on a very interesting initiative, which is a regional guarantee facility fund called GFF, that will basically back and support our partner financial institution in providing financing to target MSMEs in priority sectors like exports sectors, as well as providing the required technical assistance to them. And the main objective is to maintain and or create 150,000 jobs plus serving 20,000 MSMEs almost. Next. The other very, very interesting program, SEED, Solution Engineering Program, as I said, is to develop approach tools, manuals, and IT fintech solutions in order to enhance the quality and effectiveness of the design of our economic empowerment interventions. And we focus on 4 main services: technology system and platforms, economic empowerment toolkits, and knowledge products to basically teach our financial institution partners how to implement economic empowerment interventions, economic empowerment portal, and also training and advocacy internally within ISDB Group and externally for our stakeholders. Next. So as we speak, we are promoting economic empowerment knowledge products. We launched 3 toolkits. We launched the economic empowerment portal, and also we are working on the last phase of establishing technical platforms that include core banking solutions, blockchain, smart contracts, and so on and so forth. And as I said, we launched already the training and advocacy for our regional hubs and for our partner financial institutions. Next, please. These are examples of the toolkits, and you can find them free of charge, uploaded on our website. Next, please. Next. So this is the last section, and I would like to share with you an overview on what we do. I talked about the bank itself, ISDB, but these are there are some efforts, valuable ones, deployed by our entities. We have ICD intervention, and ICD is our private sector arm. They extend line of financing to MSMEs. They provide short-term financing for MSMEs working capital. Also, they participate in equity when deemed necessary. But they provide advisory service as well. And we have ICD is running a good number of programs, but just to name a few, they have Brave program, which focuses on women-led businesses, and they are providing financing. They provided already financing to 25,000 plus MSMEs in 3 or 4 countries, and they created around 150,000 jobs. Also, ICD is a major shareholder in AFA SME Fund with an allocation exceeding $100 million to boost MSMEs growth and expansion in the Kingdom of Saudi Arabia. Next. ITFC also is doing a great job. ITFC is our trade finance arm. They are supporting MSME development in our member countries through extending line of financing to integrate MSMEs into value chain and markets. They finance direct finance, the direct trade finance to MSMEs. They provide grants also for technical assistance and capacity building. They have a good number of projects, just to name a few. They have an excellent project replicable to other countries called She Trades, targeting women-led MSMEs and young female graduates. Next. We have also ISFD. ISFD is our solidarity arm, our poverty alleviation. Again, provide line of financing and equity capital to microfinance institutions. They provide a grant for market-oriented training to improve MSME skills and smart business development. They are taking a leading role in establishing the guarantee funds I just talked about previously, and also they provide concessionary loans, especially to the least developed countries. They have a good number of projects. They have a huge portfolio of microfinance project, ES program, SERV also. They are a big donor of SERV, and so on and so forth. So this is in a nutshell an overview of the efforts deployed by the bank and its entity to support MSMEs in our member countries. Probably will elaborate on that during the Q&A session. Thank you, Kiki. Over and back to you.
Thank you very much, Pak Nabil. I'm very amazed. You present from the general to details within 20 minutes. As it's very interesting, and thank you very much for sharing your knowledge and the Islamic Development Bank's mission on this topic. I note that it starts from the evolutions of the Islamic Development Bank starting in year 2000s, and then move to the more economic empowerment centered, and then focus on micro, small, medium enterprise economic empowerments. From you mentioned about designs and intelligence partners, and that's also very interesting about how you explain the iceberg phenomenon, that consists of infrastructure, market access that I note here. I can say that capacity and access to appropriate funding, and more detail into the programs, and including the economic empowerment scheme. So it's all very knowledgeable, and we really appreciate. Thank you very much, Pak Nabil, for your for sharing your knowledge and then thoughts with us. Okay, without further ado, we move to the next stage, which is question and answer. And in this question and answer sessions, I will lead the question and answer. So the committee, I believe, is waiting for the questions from the audience. But before that, let me pass questions that I wrote myself, and then here, of course, with the cooperation with the committee. And here we are proud to tell you, speakers, distinguished speakers, that we have 236 participants, I believe, around the world. We are very proud to have these 200 participants, and these very productive talks. That we have some questions here, but before that, maybe before I choose the questions, let me make one or two questions for each speaker. Let me start with the Ibu Siti, represents on behalf of Ibu Siti, who's gonna represent Ibu Siti. I have one questions about the we believe that digital economy through the empowerment of small medium enterprise, I think not only Indonesia but around the world, can reduce the pressure of inflation, because it's used or adopts inclusiveness, which is bottom up, that open access to all the business, to all people, to open the business without barriers, and it increase not only productivity but also reduce the inflation's pressure in Indonesia, because we witness that in the last I think 10 years, when Indonesia entered the enthusiasm of digital economy with the role of small medium enterprise, our inflation rate also quite stable in the stable level. It's not a high jump inflation kind of. So maybe I can ask perspective from Ministry of Cooperative and Micro Small Medium Enterprise Indonesia to on these perspectives. If yang mewakili, yang presents Ibu Siti, can have a share on this, the roles of small medium enterprise over the digital economy in increasing productivity in Indonesia. Who's gonna present the Ministry of Cooperatives?
Terima kasih. Assalamualaikum warahmatullahi wabarakatuh. Terima kasih Pak Keki.
Waalaikumsalam warahmatullahi wabarakatuh.
Izinkan saya untuk menyampaikan dalam bahasa Indonesia terkait dengan digitalisasi. Per tanggal 20 atau per Juni tahun 2022, setidaknya sudah ada 19,6 juta UMKM itu yang memiliki atau yang sudah masuk dalam digital onboarding. Angka ini berarti ada tambahan kurang lebih 1,3 juta sejak awal pandemi, atau 30,15% dari total populasi UMKM, atau 65,3% dari target 30 juta UMKM yang go digital pada tahun 2022. Ekonomi digital Indonesia itu diproyeksikan juga akan menjadi terbesar di Asia Tenggara, seperti yang tadi disampaikan oleh Ibu Siti Adjijah. Kurang lebih ada 4.530 triliun. Angka ini ya potensi yang sangat luar biasa dan terbesar di Indonesia. Itulah yang menjadi salah satu pemicu kami, bagaimana kami bisa untuk meningkatkan para UMKM ini untuk masuk atau onboarding secara digital. Mungkin itu ya yang bisa saya tambahkan.
Iya, terima kasih Pak. For Pak Martin and Pak Nabil, Indonesia micro small enterprise that enter the digital world increased 1.3 million during the pandemic, and now achieve number 19.6 million user for digital. It's a huge numbers. If I take country, number of population is almost to one size of populations in country in Southeast Asia, for instance. Yeah. So this is an indicator that the Ministry of Cooperatives take that the increasing number of digital SMEs show significantly even after the pandemic, and hopefully this will support Indonesia economy in the future and support the productivity as the Ministry of Cooperatives mentioned. Okay, let me move to next, Pak Martin Godel. You mentioned that 2/3 of micro, small, medium enterprise in Switzerland have affected by the pandemic, but only 3%, or if I'm not mistaken, only 3% that proposals of finance was rejected by the financial institutions. So it gives quite a large impact to the small medium enterprise in Switzerland, but in terms of financial proposal rejections, 3% is quite small. Maybe you can elaborate how small medium enterprises in Switzerland can have this kind of resilience, in particular for or from the financial proposal perspective, how they convince the financial sector that with their positive future economic in the front. And I have two questions, because you also present about from the OECD perspectives. Can you give us more elaborations on the transition, as you mentioned? What I come across in my mind is green and digital transitions. Maybe you have another that OECD take as a note for the transitions coming in the world for the SMEs. I think there's those two questions for Pak Martin. The screen is yours.
Thank you very much. Maybe on the first question, this a little bit seems puzzling, but it's easily explained. So we first, the resilience of the SMEs in Switzerland largely was built that until before the crisis, about almost 2/3, 62%, have not relied on debts. That means that most SMEs were self-financing, or in other terms, they created their own reserves over the years of their business, so that investments and all types of, and also liquidity needs and so on, that these were financed or self-financed by the SMEs, and therefore were not requiring that much of external financing. And the overall banking market, or banking for SME market works quite well, which then leads to these only 3% rejection rate. Now, why did the percentage of self-financing decrease and the banking financing increase? This was not due to a shift in the market as such, but during the COVID-19 crisis, the federal government has set up a special program, a COVID-19 loan guarantee, specifically designed for SMEs, that they could receive a guaranteed loan in a very easy and speedy fashion. So basically it took only a couple of hours, maybe maximum 1 or 2 days, until SMEs in the very early days of the COVID-19 crisis could receive a bank loan that would give them the liquidity for about 2 to 3 months, because at the very early stage we did not know yet how long and how deep the crisis would be, and especially the lockdown, how long the lockdown would be, how long companies had to be closed. So this loan guarantee was designed to keep SMEs afloat for at least 2 to 3 months. That was the objective, and that's also what it worked very well. SMEs took it up, took this loan guarantee, and we can say that already today, 2 years after the initial credits guaranteed, already 1/3 has been fully repaid, and now the remaining 2/3 can be repaid over the next 6 to 8 years. So that, and then companies will go back to it is highly unlikely, or we do not expect that they will rely more on external financing in the future as in the past with this transitory special crisis situation. Then the other question that you mentioned regarding the OECD recommendations regarding the transitions. So we have here several aspects, but I think the two are transitions or transformations are most important: the digital transformation and the green transition. Of course, one could also include internationalization and global value chains. And Nabil Galeb from the Islamic Development Bank has mentioned the importance of the trade and import-export financing and so on. And I think that is definitely a part as well. Now, regarding the digital transformation, this is quite an extensive program there. That there are also various studies that are presented, because it goes far beyond only the access to resources or to financing. That would not be sufficient in the digital transformation. We need, on the one hand, a very good educational background, and this starts already, I would say, like in the public schooling and at universities, so that people who enter the labor market are digitally skilled. Then we need a transformation of SMEs themselves in order to make use of the digital capabilities, including the platforms. Various platforms are very promising opportunity, providing promising opportunities for SMEs, as it opens up a much wider customer or potential customer base than whatever SME could reach themselves. Then, of course, also the regulatory framework is important, regulating platforms, regulating the contractual relationship between SMEs and platforms. We have then, of course, also the entire international banking that is relevant too, so that there is easy international transfers made. This is all a part of the of a digital transition, of making use of e-commerce, that we have an easy and seamless international bank transfer without high fees. This is extremely important. Then, of course, the green transition, that's the other element where it's mostly, I mean, beside the of course, skills and so on, mostly it requires important investments by SMEs. SMEs are a heavy CO2 emitter, an important CO2 emitter globally, which means that we need to provide tools that SMEs can achieve the green transition and reduce their CO2 emissions.
Thank you very much, Pak Martins. It's a very clear and crystal clear answer. From your answer, I've heard. I think one of the CEO in the world mentions that to be able to speak in English is important, but that's not only the only factors. The other factors is to understand algorithm. So understanding the digital is now very important in the world. Even if you cannot speak English, you can speak computer language is enough. So thank you. Digitalization is a very important. Thank you very much. And then for environment framework, I also believe that in the future, like you mentioned, customer driven is very important. Now customer is very critical, and they are very sensitive to environment issue of the product that they bought. So if the SMEs they don't consider also the consumer driven on the sensitivity in environment issue, they will lag behind. Thank you very much for sharing this knowledge with us. Experience from Switzerland is very important for Indonesia SME as well. So last not least, my questions for Pak Nabil. Pak Nabil, let me ask the questions about the opportunities and challenge to encourage developing of micro, small, medium enterprise, in particular the member countries of the Islamic Development Bank. Can you more elaborate on that issue, please?
Thank you very much, Dr. Kiki. Very, very interesting debate, honestly. With regards to the challenge and opportunities, in my presentation, I mentioned a few challenges are facing not only MSMEs but vulnerable categories at the bottom of the pyramid in our member countries. So basically, we identified 6 main barriers, as I said, mainly difficulty to get access to well-designed projects, opportunities. These are usually these MSMEs are usually free electrons in very aggressive economy, so it's important to design for them a business opportunity profitable and sustainable, and link it with the major players in the market. They have also low social capital to build intelligent partnerships. So we usually, the economic empowerment institutions, act as a link, act as a moderator, agent to represent them on behalf of the public sector, on the private sector, and international organization. Why not? They have a lack of affordable infrastructure, as I rightly said, and also there is an issue when it comes to secure markets, and this is why basically usually we start our economic empowerment projects when we build up our projects around downstream or the upstream of the value chain by securing the market, all right, and find the kind of taker from the private sector willing to absorb all this production or services produced by MSMEs. And also there is an issue of funding, and this is very, very well known. And this means simply that we have to run away from the orthodox model of financing and try to innovate and accommodate the financial institution when it comes to fund or finance the MSMEs. And usually it's about risk. So when we develop economic opportunities or economic projects around the value chain, when we secure markets, when we link these people or this enterprise with the right stakeholders, at the end of the day, we are managing the risk on their behalf, and we're maximizing the chance that their projects will be successful. It's also important that when it comes to developing and finance MSMEs, the traditional commercial banking approach is very complicated. And as I said, there is a great need to develop, as we speak, a more appropriate risk analysis model that is more inclusive, that take into consideration the specificity of MSMEs, especially when we consider the importance of these vehicles in our OIC member countries. On average, per 1,000 people, we have on average 53 MSMEs against 25 point something as a global or as an international average. So it's really there is a need, there is a huge pressure on us to innovate when it comes to the financing models. Also, the COVID pandemic showed us that digital transformation is very important. As rightly mentioned by Martin, I join my voice to his voice. It's very, very important to invest in digital transformation of MSMEs. So from the perspective of these vehicles going forward, technology capabilities will be really critical for their sustainability and their success, which includes, among others, connection with consumers through e-commerce platforms, setting up websites with embedded e-payment system. It becomes a must. Connecting them with other suppliers through B2B platforms, it becomes also a must. And this will definitely decrease the operating cost and make them more competitive even in the eyes of financial institutions. There are also substantial opportunities for MSMEs with the appropriate public and private interventions to anchor and to scale up the halal industry with the Muslim world, especially within the halal food, the media, the pharma, the modest fashion, and the cosmetic sectors. Together, they represent about $2 trillion as per 2021 estimates of the total consumer spending in the global Islamic economy. So this is a huge market, a huge opportunity for them to position themselves around the sectors and try to secure their part into this huge economy. So this is an industry that is only expected and forecasted to continue to grow, and the MSMEs are really primed to benefit with the right tools, partners, financing and policies in place, and leverage on this momentum in terms of digital transformation, as I said, to basically go through this crisis, and why not seize this opportunity to become more resilient and more competitive and more innovative. This is what I have for this question, Dr. Kiki. Thank you. Over.
Thank you very much, Dr. Nabil. Very important point that you touched just now, value chains creations, value network, as Pak Martin also mentions. So from the multilateral perspective of Islamic development, that it is not only about one country vision, but also multi-country vision, cooperation between countries, inter-countries. Network is very important. And I just want to emphasize what you just mentioned about halal food. I believe that it's not only how to serve a domestic market of major Muslim population in the world, but also to the rest of the world. I mean, all around the world, that they also need to consume the halal food all around the world. And I believe that with this production network, small medium enterprises under the Islamic development countries, they can cooperate to produce not only to fulfill their domestic market, but also to serve global market for the halal food. That's very important to connect between the small medium enterprise around the world. So thank you very much, all the speakers. But before I end the session, we still have around 24 minutes, but we need to around 10 minutes for the closing time allocation. So we have about around 15 minutes or 14 minutes. Let me take one or two general questions that all speakers can answer. Is it possible? Can I have a list of questions from the audience? I want to take one general questions to all the speakers, and please speakers, distinguished speakers, to give answer maximum 4 minutes for the questions. Let me see. Okay, it's a possible guideline. Okay, maybe because I show one general, I think quite general, is about small medium enterprise Syariah. I believe, Pak Martin, you have also in your mind about the small medium enterprise Syariah. If you may have, but if you don't have example in Switzerland, it's okay. But I will ask Pak Edi and also Pak Nabil about your thoughts from the institution, of course, because you present your institutions, about the small medium enterprise Syariah concept. And for Pak Martin, maybe you can have a specific strategy for small medium enterprise in the Switzerland. Yeah, that's a very general one. Just to close this session, you can have 4 to 5 minutes to answer the questions, please. I start with Pak Edi. Gimana Pak melihat ekonomi syariah, small medium enterprise di ekonomi syariah, Pak? Silakan, Pak.
Terima kasih. Terkait dengan ekonomi syariah ini ya, Kementerian Koperasi dan UKM, mungkin dalam hal ini pemerintah, sudah menginisiasi beberapa program. Kami bersama-sama dengan KNEX, ya, Komite Nasional Ekonomi Syariah, dan juga program-program yang kami lakukan dengan perbankan yang syariah, yaitu dengan BSI, karena kebetulan BSI ini merupakan program bentukan dari pemerintah yang fokus kepada halal. Di sini kami bersama-sama dengan perbankan syariah ini mengembangkan program-program untuk UMKM yang syariah atau halal. Di sini kami melakukan roadshow di setiap daerah bersama-sama dengan BSI, bagaimana program untuk para pelaku UMKM ini bisa kita lakukan bersama-sama. Dan juga kami juga melakukan program yang dengan APSI, ya, Asosiasi Fintech Nasional Indonesia, di mana program-program dari fintech tersebut juga menyasar daripada untuk produk-produk halal dan juga syariah, itu yang juga kami kembangkan bersama. Mungkin itu, Pak. Terima kasih.
Terima kasih banyak, Pak Edi. So, Pak Edi mentions that about economic Sharia economy. We have Indonesia have committees that work together with the governments to promote economy Sharia economy and small medium enterprise related to this. Okay, Pak Nabil, maybe you have a view on this Sharia economy, small medium enterprises.
Yes, Kiki. Actually, I saw another question addressed specifically to ISDB.
Oh, okay, okay. You can go to that question.
Yes, to the list. I think let me address it, please, because it's addressed specifically to ISDB. If you get back to the list, please.
Please, Pak.
The question says from ISDB about toolkit: is it open source? Do you have strategy to support business incubator? So these are 2 or 3 questions in one question. So regarding the economic empowerment toolkits, yes, it's an open source. It's free of charge. You can download it from our website. So far, we published 3 toolkits: the economic empowerment design toolkit, with the main objective to provide guidance and practical tools to embark on the journey to practice the economic empowerment approach. We also published the Islamic Financial Product Implementation Toolkit, which is a kind of step-by-step guide for financial and microfinance institutions on how to structure and implement the most common Islamic modes of financing. And a third kit, which is a monitoring and evaluation toolkit, which is a comprehensive guide for financial institutions to basically monitor their progress and self-evaluate their financial and the social performance. These toolkits are published in English and are published also in French. The Arabic translation is ongoing, and hopefully one day we will go for the Indonesian language and other languages. This is for the toolkit. With regard to the second part of the question, do you have a strategy to support business incubator? We don't have a strategy per se, but we have initiatives. All right. As we speak, we are supervising and supporting BINA initiative, which is an initiative funded by the Libyan Development Fund, and which is a kind of business incubator for startups and innovation. And basically, it's meant to help Libyan youth to embark in the entrepreneurship field. But the beauty of this initiative now, it includes other refugees from fragile states like Syrians, like Yemenis, like Iraqis, and it becomes like a prototype replicable to other countries in similar conditions. I would say I will name them fragile countries, and the idea, why not, we will inshallah build up a kind of program in the future for this kind of incubators to help fragile youth coming from fragile states. Regarding the halal value chain, this is very interesting topic. As we speak, we don't have a strategy as economic empowerment department. Probably the bank, so other entities have other initiatives, but as economic empowerment department, we don't have a specific strategy around halal value chain. But this is, I would say, a very interesting topic that would be on our table, our agenda for the next years, and definitely we will look closely to this and try to come up with a global initiative for our member countries, inshallah. Back to you, Kiki. Thank you.
Thank you very much. Thank you very much, Dr. Khalid. And yes, that's very specific questions, very important, the toolkit. So please, audience, to visit the toolkits from the Islamic Development Bank. Last but not least, you have 5 minutes, Pak Martin. You have also specific questions. I saw it. It's on incubations strategy, small medium enterprise in Switzerland. But if I may, I want to ask also additional questions on following that. How do you see the potential cooperation small medium enterprise between Switzerland and Indonesia? Thank you.
Thank you very much. I'm very happy to engage. I also saw there was a question about the link to the OECD recommendation. I sent the link to the administration, so please you can share the link to this document and then to the various information that is on there. Now, maybe first on the incubation. So incubation, I translate with creating a company, setting up a company. And I think I would like to propose a little bit of different perspective on this topic. Entrepreneurs around the world are extremely creative and inventive. They are usually outstanding personalities that are ready to face challenges and to work very hard to make their business running. So that I would like to say here, as we're all talk about entrepreneurs, and I am very sure that this is also the case in Indonesia and in other countries, as in Switzerland. These entrepreneurs are really doing an amazing job, facing difficulties and challenges every day, and so are working very hard to make it happen. Now, speaking from as a government representative from a federal administration, we do have to recognize that very often we, the governments, which means the regulations that we set in place, are some of the biggest headaches that SMEs and entrepreneurs face. So they not only face challenges to sell their products, to produce their products, to source the various materials that they have and get a good marketing and so on working. However, they also have to face challenges by the regulatory environment that is created by our systems and our nation's frameworks. And so the most important incubation policy, the most important policy to support entrepreneurship as we see it here in Switzerland is that the government does not create additional burdens for entrepreneurs. What does this mean? First, it means that it must be very easy to set up a formal company within a couple of days in very transparent ways, best way in a digital way, fully digital, no interpersonal contact, no papers, no stamps, nothing, but in a very easy way, so that companies can formally establish themselves without high costs and in a transparent way. This is a key element of strategy. Another element where governments themselves can do a big job is in terms of the tax system. And here it is not so much the problem of the tax, how high the tax is, how much they have to pay. Entrepreneurs are usually much more complaining about the tax system than about how much they have to pay. So the one element how to measure this is how many hours it takes for entrepreneurs, especially micro and small entrepreneurs, how many hours does it take to comply with all the tax requirements? So how to fill in the tax and to pay the tax. This must be something extremely easy, straightforward, fully digital, totally transparent, so that even a one-person company can easily fulfill their tax requirements, and that this does not take away their time. Because we always have to think that a government entrepreneur has, or not a government, an entrepreneur has to make a choice whether he spends 1 hour for the government or 1 hour for the customer. And so the more hours that through regulation we require the entrepreneur to work for the government, the less hours he has available to work for the customer. So we have to provide the best possible environment that the entrepreneur spends the least amount of hours for the government and the most amount of hours for the customer. And last but not least, another extremely important incubation strategy element is the easy enforcement of contracts and the resolving of to resolve insolvency. If it is easy to settle disputes in courts in a speedy fashion that is transparently done and goes rather quickly, as well as a company that stops working, that gets into insolvency, that is normal. This is not something economically problematic on an overall perspective. Companies, as much as they incubate and get into life, they also get out of and exit the market. That is easy. That is also normality. However, it is the regulatory environment that determines how many years it takes to go through an insolvency. And here it is the government's job to create a regulatory environment that makes it pretty easy to exit the market, to dissolve the company and go through insolvency regimes, and also enforce contract in case this is necessary. Because even if it is easy to enter the market and set up a company, but if an entrepreneur is aware that enforcing contracts in the court or exiting the market through dissolving the company is very burdensome, then the entrepreneur might think in the first place not to enter the market at all, because there is too high the entry levels, the entry barriers, no, sorry, the exit barriers are too high, or the maintenance barriers are too high. So better not to enter the market at all. So this is probably the most important elements that the government can do before supporting the companies. It is to eliminate the stumbling blocks that we often as regulators put in front of the entrepreneurs. Thank you.
Okay, thank you, Pak Martin. We come to the end of the times. We still have 8 minutes, but for a closing session. So yeah, talking about or discussing about the small medium enterprise, one panel sessions, of course, not enough. So don't forget, for all the panelists, we still have another panel session and also talk show. So please mark your date to attend, if you may, another topic in relations to this micro, small, medium enterprise empowerment. So on behalf of the the AIFC committee, Fiscal Policy Agency, Ministry of Finance, as chair for this first sessions, I would like to say thank you very much for Ibu Siti Aziza and Pak Edi, and then Martin Godel and Pak Nabil Galeb for your attending and for your knowledge sharing today. Of course, this is very productive discussions and good food for thoughts. And thank you for sharing good knowledge to all participants. And I believe that not only coming from Indonesia, but also around the world. So I close these sessions and hand over to the MC. Thank you very much for all the participants who are attending in this session. Thank you.
Thank you very much.
Thank you Pak Martin. Thank you Pak Nabil, Pak Edi. Terima kasih banyak.
Thank you very much. Have a great day.
Have a good day.
Thank you.
Good day. Stay healthy.
Have a good day. Bye bye. Thank you, Martin.
Bye bye. Assalamualaikum warahmatullahi.
Yeah, thank you very much, Dr. Kiki Ferrico and our panelists for the intense discussion and for giving us more insights regarding MSMEs empowerment.
Ladies and gentlemen, now we come to the end of the whole agenda of the first day of the 6th Annual Islamic Finance Conference. We would like to say thank you to Minister of Finance of the Republic of Indonesia, Mrs. Sri Mulyani Indrawati,
Governor of Bank of Indonesia, Mr. Peri Warjio,
Vice President Finance and Chief Financial Officer of the Islamic Development Bank, Dr. Zamir Iqbal,
Co-Chair of G20 Global Partnership for Financial Inclusion, Ms. Magda Bianco,
Dr. Febrio Kesharibu,
Dr. Sami Al-Suwailem,
Mrs. Siti Aziza,
Mr. Martin Godel,
Dr. Nabil Galeb,
and Dr. Kiki Ferrico.
And of course, thank you to all participants for the interaction and a very great discussion. We also wish to have your feedback and thoughts in a survey form that is available in the chat box and on the comment section of your YouTube channel. Certificate of attendance will be eligible for participants who completed the 2 days feedback form.
All conference materials are also available for the downloads at the same link.
We will be back tomorrow on the second day of the conference at 10 a.m. Jakarta time with the same Zoom link and YouTube channel.
Make sure to attend the second day of the conference, since we will have the most awaited segment tomorrow, the announcement of call for paper winners and awards.
We apologize for any mistakes and inconvenience in presenting this conference. Thank you for your attention and see you on the last day of the 6th Annual Islamic Finance Conference. Wassalamualaikum warahmatullahi wabarakatuh.